saving and spending. Furthermore, technology also has democratized access and awareness, and the financial products and services industry is responding. To this end, India Today's Smart Money Financial Summit has brought together leaders and experts from across the spectrum that includes financial services like banking, mutual funds, insurance, stock markets, and real estate, and more, to deliberate and discuss the latest trends in policies, products, and technologies in the fast-evolving world of personal finance. Before we begin, I would like to take a quick moment to thank our sponsors: banking partner Union Bank, insurance partner LIC Life, investment partner SBI, and partner NL Dalmia. To our esteemed audience, thank you for taking the time out to join us today. We also encourage you to share your thoughts about the event on social media using the hashtag India Today Smart Money Financial Summit. Now, without further ado, let me invite onto the stage MG Arun, Managing Editor at India Today, to kickstart the conclave with his introductory remarks.
Thank you, Sonal, and a very warm good morning to all the ladies and gentlemen present here. Welcome to the India Today Smart Money Financial Summit 2024. There has perhaps been never a time like the present day when planning and managing individual and family finances have achieved paramount significance. The COVID-19 pandemic has revealed to us how uncertain lives and livelihoods can be. Data from a recent survey has revealed to us how that 22% of Indians were forced to deplete their lifelong savings due to unexpected medical emergencies. It showed us how important it is for the individual to take responsibility for his or her current and future financial situation and set financial goals both for the individual and the families concerned. India is also passing through a very interesting phase where individuals driven by high aspirations are going in for better and pricier products as the premiumization phenomena sets in, setting new rules in how people save and spend. At the same time, technology is driving not just awareness on various financial products, but also making it easier to plan and manage one's finances in an appropriate manner. Artificial intelligence, for instance, is providing us the latest tools to automate tasks, make informed decisions, and enhance security. Let us make no mistake, we are poised at a very interesting stage of the country's growth. India is already the world's 5th largest economy and is poised to become the 3rd largest by 2027. Our stock markets have been robust, and the Sensex has touched the 70,000 points level just the other day. India is also the fastest growing fintech markets in the world. From a market size of $50 billion in 2021, the Indian fintech industry is estimated to grow to around $150 billion by 2025. What are the driving forces behind this? One, of course, is the increasing internet and smartphone penetration. India already has the 2nd highest number of smartphone users globally after China, and has the 2nd largest number of internet users. We are expected to reach around 1 billion internet users by 2026. The other, of course, is the favorable demographics that we have. As much as 68% of the India's population is young, and 55% of its population is in the age group of 20 to 59, which is the working age population. By 2030, India will add 140 million middle income, and 21 million high income households, which will drive the demand and growth of Indian fintech sector. Another reason has been the financial inclusion initiatives, programs such as the Jan Dhan Yojana, the Deen Dayal Upadhyaya Antyodaya Yojana, Direct Benefit Transfer, and Atal Pension Yojana, among others, have accelerated the digital revolution and brought more citizens, especially in the rural areas, within the ambit of digital financial services. But there is a catch. Despite the country's initiatives aimed at enhancing financial inclusion, there are significant disparities in terms of account utilization as well as access to savings and credit facilities, for instance, among women. 1 out of every 5 women in our country lacks access to a bank account. Various obstacles hinder women from accessing financial services, including difficulties in providing proof of identity or owning a mobile phone, residing far from bank branches, and requiring assistance or efficiently utilizing bank accounts. This is only a part of it. There could be more. So, while we discuss the opportunities in financial services today, we expect some of these challenges to also get highlighted during the course of our discussions. The India Today Smart Money Financial Summit opens a window to these changing times in the world and presents an ideal platform for all the stakeholders from various segments of the industry to come together. We have lined up a very stellar panel of experts for the day, and we hope that the deliberations today will really be a great eye-opener. So thanks again for coming on a Friday, and welcome to the India Today Financial Summit. Thank you. Sonal.
Thank you, MG, for setting the tone of the event. Our first session is the keynote address on disruption as a new norm in financial services. The session will delve into the rapid and transformative changes within the financial industry, primarily driven by technological advancements, changing consumer behavior, and evolving regulatory landscapes. To take the session forward, I would like to request our esteemed speaker, Mr. V. Vaidyanathan, MD and CEO at IDFC First Bank, to join us on stage. Also, please note we will have a round of questions at the end of this session. So while he's speaking, and if you want to leverage from his expertise, please keep your questions ready. And steering this conversation will be my colleague, MG Arun, a managing editor at India Today. Over to you, MG.
Our first speaker is Mr. V. Vaidyanathan, who indeed doesn't need an introduction for the financial world. He has been one of the most dynamic bankers around. We have seen how, as a young banking professional, he was on the board of ICICI Bank, I think when he was just 38 years old. Thereafter, the entrepreneurship bug bit him, and he went on to start the highly successful firm Capital First. And now he is the MD and CEO of IDFC First Bank, which is next door. So it's quite convenient for us to drop in for a cup of coffee to his office after this. So I don't think, we can have anyone better than Mr. Vaidyanathan to open this particular event for us because of his long experience in bringing, the latest personal banking trends into the areas that he has been working. I mean, he has been associated with his entire banking career, with the customer interface. And I think he's the best person poised to talk about how to make use of the disruptions in the banking sector to really touch the lives of the common man. Over to you, Mr. Vaidyanathan.
Good morning, ladies and gentlemen. It's really a pleasure to talk to you this morning. And Arun, thank you for introducing me to the audience and for inviting me today. The publication India Today coming up with this concept of Smart Money Financial Summit. I'm conscious of the audience for this segment, not just this audience sitting here, but even the readers of India Today. When I think of that segment, it is not necessarily that everyone is really very up and running in the financial services world and knows all the terms and technologies and terms. So I'm trying to speak in a way when this finally gets published, the common reader can relate to it. So think of it, that's the context of this talk. Now, and therefore I'm going to avoid, complicated terms like, middleware and APIs and stack and all that kind of stuff. I'm going to just try to keep it simpler. Now, when we think of digitization and disruption, so to say, in financial services, which is the subject given to me today to speak to all of you. Now, sometimes people tend to think of disruption as something negative, like disruption on the road, traffic got disrupted, or telecom services got disrupted. So sometimes think of a bit of a negative connotation to it. But I would like to share with you that in the financial services space, with the use of all the new technologies and the new number of ecosystems coming up in the country, with telecom and banking systems and new technologies and generative AI and blockchain and hyper-personalization and many such new technologies that have now come, disruption is a good word. And that's the point I wanted to leave with you. And it has a very, very positive impact on the financial services to the common people of the country. I'll explain why, how. Now, think of, not very long ago, if you got a statement of account from a bank. You have a bank account, fine, you'll be some debits, there'll be some credits, you'll get a statement of account. So what would you get? First, there was a passbook, maybe 10, 15, 20 years ago, and then it became electronic statements. But that statement doesn't give you much. It just tells you these debits happened, credits happened. But the value of digitization comes when that digitization is used to create insights. And insights are a value add level above information. So, for example, you could get a statement of account as usual, but a bank can now analyze the statement for you, which could not be done in the physical world. Bank can analyze for you and say that this month or this quarter, you spent so much money on household goods. You spent X amount of rupees on groceries. You spent during this year so much amount on travel. You spent so much money on donations, or you spent so much money on investments. You spent so much money on EMI. Now, out of hundreds and thousands of transactions, if someone analyzed all of them, put them together, send you a summary at the end of the month or end of the year or end of the quarter, that's value add. That's so different than giving a statement of account in a passbook. So, moment you moved it away from a physical paper to a digital statement and analyzed it, there's value. So that's one very simple example. Now, what we have done in IDFC Bank, we got a new bank, and we always wanted to use technology to find some extra value for customers. So what I'm telling you is not just academic. So we started a capability on our app for customers to come and analyze and tag every transaction. You could tag this as a grocery. You could tag this if you paid a particular vendor and you tagged that as a travel agent. The next time the same transaction happens, system will pick it up. System will know it's a travel agent and put it in the auto categorization module. And end of the year, end of the month will give an analysis. So the value add. The second thing is that advice. When it comes to financial advice, if you notice, the traditional way of doing financial advice is that people would go to maybe the chartered accountants for some advice, or people would go to maybe certified planners, maybe estate entities, or maybe family friends and take some advice. Now, those advice are only, those many of them are well-meaning, but they're also limited to the extent that you need to have a certain amount of corpus before they can offer you that advice. Even banks, end of the day, if you keep 20,000 rupees or 10,000 rupees with the bank, and the revenue the bank is making from you is really very low and is probably just measuring off the cost of giving you that service, even banks can't afford to give you a relationship manager of 10,000, 20,000, no matter what bank will tell you what. Not possible. But therefore banks will say, if you keep 20 lakhs with me, 30 lakhs with me, 40 lakhs with me, then I'll give you a relationship manager, right, or something like that. And then I'll give you financial advice, I'll give wealth manager, or something like that. So therefore, in this example, what is happening is that value or advice or quality advice, again like the case of the certified planners example, is going to a certain set of people who have the necessary critical mass. Now what about the common people? What about the common people? For common people also, money is money. For us, maybe 1 lakh is wealth, but maybe for that person, 10,000 is wealth. Right? And that person also needs this advice, but nobody can afford to give it to them. Then again, the digitization comes as a role to play there. Why? Because the advice that the system can give is different than the critical mass at which system can give advice is much, much lesser than the critical mass for giving a human advice. Human costs money. Relationship manager costs money. Banks can't afford it below a particular critical size. So I'll give you an example. So now since everything is digitized in the example I'm giving, today, if you know that India's moved to an open banking ecosystem. In open banking ecosystem, what really happens? In open banking, you may have heard the term, but sometimes people think that freely transferring money from one bank to another is open banking. That's not open banking, just to tell you. Open banking is, and India is becoming a pioneer in open banking. And what is open banking? Open banking is that it is a way whereby banks can, with the consent of the customer, share your information to the next service provider, financial services provider, or bank. For example, if you, in open banking, think of it, there are a set of banks, and they all have a technology service provider. You're a customer. You're giving a consent to the bank and saying, okay, I'm okay for you to share my information, all digitally only, with this technology service provider. And the next service provider to you, supposing you're taking a loan from somebody else, some other bank. Now that bank can take your consent, access your all other bank information, and then take a decision on giving you a loan. So in open banking, this is possible. Now it's an open architecture. Now, coming back to the earlier point, now through the open banking architecture, any service provider, say our bank, can access your bank information with 5 other banks, know how much balances you've kept there, what are the transactions happening there, analyze it together for you, and then say that, you've been getting total inflow of X thousand rupees a month, say 40,000 rupees a month. You've been spending, say, 15,000 rupees a month. So you're, say 25,000 rupees a month. You're saving, say, 15,000 rupees a month. The total investments you have is X. The total loans you have is Y. So we know all the stock information. We know all the flow of money information. And then we can say that we could figure out how much investment you've done in mutual funds. So then bank can combine all this information together and give you good quality financial advice. Now, what has happened is that not only because it's a power of digitization, we can give you quality advice at bottom of the pyramid, but can also be more precise advice. It's more precise advice because it has consumed information from everywhere else to the open banking architecture. So there's a second big advantage of how digitization is playing an effect in the common people's lives. I genuinely in the meeting today did not want to talk about how India's ecosystem has changed and, a landscape has changed in a big way. I want to focus this conversation about what it means to you. To you, therefore, it means more personalized financial advice, which could not be provided earlier in the human-supported architecture because human beings are expensive. Technology is also expensive, but technology can be scaled up to millions of people to provide services to the common people. Now, the third thing that value add, I started the meeting by saying, what is the value add technology is doing to make your life efficient? I gave you example of how statement of account can be analyzed. I gave you example of the other one, open banking or financial advice. The third factor of where technology can be of really good use to the common people is goal-based investing. Now, many people know that, supposing 10 years from now, 15 you're 55, assuming at 65 you want to retire. Now, the truth is that awareness of retirement is low in this country, or retirement planning is low in the country. People keep putting it away till the last minute, and then they panic at the last minute, and that's a real issue. And I hope awareness also goes up. But assuming awareness also went up, the tools didn't exist. But I'll give an example of how a tool can be provided with the banking system to you so that the digitization and power of digitization can be made to be brought to good effect for you. I'll give an example. Now, supposing you're 55 and you think you want to retire at 65, just making it up. You have 10 years. Now, you might scratch your head and say, okay, I think I need, for my current level of income, I need about, say, 2 crore rupees to retire. So you go to the system and tool and say, I want 2 crores 10 years from now. Now system will first of all tell you that, listen, friend, this 2 crores will not be worth 2 crores 10 years from now. You will probably need 3 crores. Okay? Index for index, maybe 4 crores. Index for inflation and cost of money. Now, okay. Now you will say, okay. System will then say, by the way, to get 4 crores from now, 10 years from now, you need to be investing 2,10,000 rupees per month starting now. So this number was not available to you in the normal course of life. Now you know, system will throw it to you. Then you say, okay, fine, I'm willing to pay 2 lakhs a month. But what do? Where do I start? Again, technology will come to your rescue because the system will say that, okay, I believe that this is your last maybe 10, 15 earning years of your life. You should not be taking too much risk. Maybe you should be putting 10, 40% of the money in debt equity funds and maybe 60 in equity. Let us assume that you consumed that advice. Then system will say that, listen, in equity, now there are 1,000 mutual funds. We all agree, chalo, mutual fund sahi hai. Campaign is also good. We also agree also mutual fund is good. We all agree with everything. But how do you start? By the way, I've had this conversation with many people. How do you start? Mutual fund. If you go, there are hundreds of schemes. This is growth scheme, this is this scheme, this is blue chip scheme, this is startup scheme. Now you have to scratch your head. Now the system can go and analyze all the funds and suggest to you that as per our research, these top 10 mutual funds are very good for investing. Solution has been provided. This is different than saying that you shouldn't invest. It is like giving you gyan. You should invest in mutual funds. Ab kya karoge iska? But to say, boss, India mein 100 fund hai, lekin ye 3 fund bahut achhe hain. It's value add. System can give it to you. If we depend on a wealth manager, relationship manager give you, they can only reach X number of people, I told you. It's not viable. But system can make it mass available. Okay? Then if you say, I want to see what is inside this mutual fund, then through an API, system can immediately access that information, what is lying inside that mutual fund, and tell you this is the 10 companies inside that fund, or it's the 20 companies inside that fund. Then you say, I want to know what is the proportion of each of these companies inside this fund. Then system will say, these are the 10, companies. This fund holds 5% of, fund is ICICI Bank, 4% is Unilever, 3% is Maruti, etc., etc. So you say, look at it, it's okay, fine, looks fine to me, I'm happy to go. So, and then you click the button. Now what happens next? Now, when you say you got to invest 2 lakhs per month for 10 years in that example, system will also compute for you that out of 2 lakh rupees, you should be investing so much in this fund, so much in this fund, and tell you by name. You only click, accept it, and go ahead. So, this is very different than giving general advice. This is very specific advice, research-based. Now, supposing you say, no, I don't like this research because why should I trust you? Maybe you guys are getting commission from that fund. I want to do my own research. No problem. You say, okay, you do Morningstar rating, select the top 3 funds, no problem. Or you do top last 3 years performance, take it, no problem. But last 3 years top performing fund, last 5 years, you do your own research if you want to. This is the example I'm giving you of how technology, instead of giving you general gyan, can also give you very specific advice on how to plan your retirement in that example. Similarly, supposing you want to buy a car and you don't want to take a loan, right? Many people just don't like to take a loan and should not if they don't have to. 8 lakh rupee car. Fine system, it's okay. If you want to buy 8 lakh rupee car, then you should be investing, say, X rupees per month, and then same logic will tell you which funds to buy, and you can choose, you can agree, not agree, whatever. The point when it says that, again, you can do goal-based planning in making, which technology will enable for you, and human advisors cannot because they're not viable. And this is a very big factor. The other big factor of value add to people in society at large also is also how much paper is required. I can tell you when we were giving one of our loans, we counted the number of paper we were using in a microfinance loan. But just microfinance loan, 50,000, 30,000 rupees. 28 pieces of paper were required to give one microfinance loan of 35 to 40,000 rupees. 28 pieces of paper. Now, in the similarly, we were giving out some sort of loans for small entrepreneurs, micro entrepreneurs borrowing 3 lakh or 4 lakh rupees. We were using 22 pieces of paper for giving a 3 lakh or to 4 lakh rupee loan. In the digital ecosystem, now what is happening is that our people are going with a tablet, they're meeting the customer, suppose they're meeting a restaurant. So they asked earlier they were asking the restaurant, show me your paper, show me your income tax document, etc. Which they still have to ask. But what they do is that they tell you, okay, what are the daily sales here? Give me a menu card. What is the average balance in the menu card? Average ticket size the menu card. Because if a high-end restaurant, the average menu price will be higher, and lower-end restaurant, average menu price will be lesser. So we put the information. Then we check whether the owner is sitting in the restaurant or the employee is running the restaurant. So these kind of information put on a tablet, not on paper. And like this, you carry this information. This information is digitally, you ping credit bureau. You digitally ping and get the PDF document of the bank statement, which you were taking physically earlier. Now you take it through PDF. Now the analysis of this is not done on an Excel spreadsheet and printouts, etc., because machine is reading it, and machine does the analysis of average balance held by the customer in that window. Then, after doing this work, the machine is telling us that then it can do certain fraud checks about the customer all digitally, or probability of fraud. Then there are certain references you can check with maybe with the MCA site or any litigation against the borrower all digitally. Everything is done digitally in this new ecosystem, in the examples I gave you. Now, after doing all this analysis, the decision is also taken digitally. When the customer is ready to give a loan or take the loan, the sanction is also shown like this digitally or emailed or even shown on the tablet. Now the customer says, okay, I agree with this loan amount, I agree with this interest rate, I agree with this EMI, I'm happy to pay. Then we say, okay, I'm sending you a link. Agreement also is signed digitally. Okay, since we use any of the technology partners who do that. And then the document comes back to us. And then we disburse the loan also digitally. So 22 pieces of paper in that 3 lakh rupee gone. Can you imagine how much of ESG benefit it is? And when you multiply the 22 pieces of paper into 1 million loans, then you're saving 22 million pieces of paper. It's a lot. Initially, 22 doesn't sound very big to you, but it's a very big number. That many pieces of paper gone. So the value is insights, like I told you before. The value is financial planning, I told you before. The value is goal planning, as I said, mentioned before. The value is ESG that I showed you before. And these are means by which you can bring down cost of operations, because now it's digital, it's not paper. That much effort is also gone. or paper is also gone. So cost also comes down, and when finally cost to a provider comes down, eventually sooner or later in the long run, because of competition, it gets passed on to customers. So there are multiple benefits in the form of ESG, paper, cutting of trees, and value add, and making financial services available to the lower end of the pyramid in as effectively, sometimes, in fact, even more effectively than what you can give to a human being in person. No matter how qualified a person who are giving personal advice, they also cannot compute as fast as a computer can. So, and in fact, sometimes more effective than even physical relationship managers. So this is the big value of so-called disruption, which is a subject which you want me to speak about, Arun, today. There's a value of this disruption happening, if I call it disruption, if you want to call it so, but I actually call it enormous value add that is happening to the system because of power of digitization in the common man's life, like the many examples I gave you before. So the last thing I want to say with you is that there are our own organizations and banks, etc., also can do better. You know, this is just a start. We can do the focus, at least our bank is value add, solutions, not information. If you came to our app, by the way, put up a really good app. You know, why I call it really good app is not because it's, nice design and look, etc., which is, that's not the point. We have put a lot of effort behind the design and the quality of the journeys, etc. But I call it good because of the solutions. So we don't come and see your statement of account. वो तो वैसे भी कर लेंगे. वो तो just digitized paper into. But to give customers for financial planning, that's value add. To give financial goal planning, that's value add. To give customer loans within maybe 20 seconds, 30 seconds, just without using paper, that's value add. Giving good financial advice or even financial literacy programs, that's value. Though we have not yet built on our app, we have a plan for that, but that's value add. So we are continuously working. We also have to continuously better. We are really putting effort behind it. We think about it all the time. But these are the examples of what I want to bring to you of how digitization, not disruption, but digitization is adding value to the common person in the country. So thank you very much, ladies and gentlemen. Yeah. Yep.
I think that was a very wonderful kind of presentation and eye-opener towards the digitization efforts that is happening in the industry. I think that is the biggest disruptive force. And I'm sure that, all of us have maybe a few questions in our minds. So if there is someone, who would like to ask a question to Mr. Vaidyanathan, please raise your hands. We can have a quick couple of questions and then, we can, yeah, there is a gentleman there. Do we have a mic there? Please.
Well, there are many hands, so please prioritize. Yeah. Yeah, please, shoot.
Thank you. Hi, sir. By the way, I'm a big fan of yours and IDFC Bank and the banking system in India anyway. But I have two big complaints. One, I think most of the people will have similar to mine. The one is I get a message like 50,000 ka loan le lo. It's zero relevant to me. So you spoke about the personalization and so on. That's the first point, I want to say there's a lot of messages, but then personalization is missing. You talked about hyper-personalization and the Gen AI. We are running this platform, we are live. My second complaint as a techie, because we have this hyper-personalization and enterprise AI, this plethora of wealth of data which Indian banking system is missing. We are a kind of user of technology, never a creator of technology like JPMC or Citibank. I'll give two examples. हमारे यहाँ पे AI assistant में people ask, ये गाड़ी मेरी औकात से बाहर है.
Take it closer, mic, yeah.
And they say, I want to buy a Tata Punch after 2 years. How much should I save? This wealth of data, I think Indian banking system is missing even in the adoption of AI, because we are on a trajectory of user of AI. We're not creator of AI. And Microsoft, OpenAI, Google, all are looking into plethora of this data. How do you take it? Like, why can't Indian banking system be creating AI, creating data, owning data?
See, 100% you're right. We have to get better personalized. Okay, and that's a short answer to it, and it's a continuously evolving process. At least at our bank, we are really putting an effort for it. We have actually developed a capability of something called hyper-personalization. Hyper-personalization is to make you an offer at the time it is relevant to you. For example, if there's a customer who's been getting a monthly salary of say 50,000 rupees per month, suddenly the person gets say 3 lakh rupees in the account, and that will coming in April. Then this money has come probably because the person earned a bonus. Then instead of money lying in the account at 3 lakh rupees lying there and earning the customer say 3 or 4%, and maybe at that time go and give the customer a solution saying that because system throws a trigger that customer's got a balance of, so go and give a customer a specific value at point of time that look, you might want to make this investment, these are 3 options for you. That's hyper personalization rather than shooting offers. So we're getting better at it. I'd say that at least our bank, I think, is making serious efforts. Hey, Rajiv. What's the second question you said?
Why can't Indian banks be creator of technology? Why only user of technology or owner of data?
Yeah, I mean that's true actually. But you see, we are using the ecosystem. Okay, our feeling is that India has created really amazing ecosystems and transformation that never existed even 5 years ago. Where was open banking 5 years ago? It was not there. Where was account aggregator 5 years ago? It was not there. Where was even financial planning 5 years ago in a serious way? Even now it's not great, but at least it's making its initial stages. Supposing you want to make an investment into gold. Now, you think gold means I have to go to the shop and buy gold. It's not like that. Because now e-gold is available. Sovereign bond, gold bonds are available. All purchasable by... So again, making it available to the right person at the right time through hyper-personalization is something we work on. Yeah. Yes, sir. Yes, sir. You can give the mic to it's actually better. Others can hear you better.
So a huge fan, Vaidyanathan.
Thank you.
And shareholder of IDFC First Bank, account holder, multiple account holders of First Bank. Great app. I mean, everything is perfectly all right. My one question to you and everybody else who's present over here from the financial fraternity is this. When will this KYC mess end? How many times do I have to give my PAN number, my Aadhaar? My PAN Aadhaar is already linked. I have a driving license. I have a passport. The address in all the passports and all the document is still same. But every 2 years, 3 years, banks want me to come physically sign a form in front of them. What about ESG? Thousands and millions in pieces of paper are just getting, I don't know what. I mean, is there a Bhangar site somewhere where they collect all this paper and then sell it and make money out of it? When will this mess end?
It's frankly... Let me just say that it is a very important and serious issue you raised, because every time you give a photocopy of a KYC, we cut some tree somewhere, and we feel it. Some tree has been cut somewhere. Well, the good thing is now you can move everything to DigiLocker, and hopefully you can tell your bank next time, here's my DigiLocker link, take it from here, and we should do better. We should do better.
I have a question for you. Yeah. In fact, I think all of us listening to your talk take home one very crucial area, which is that the efforts that banks are putting in, I mean the leading banks are putting in to ensure that there is much more financial literacy and also the digitization efforts which will make it much more easier for people to plan their future better. And he quoted some examples like, if you have so much of money in your bank, how do you sort of utilize it, etc. I'm sure there are a lot of loose ends to tie up in the banking space, and all of us here will have so many grouses when it comes to, the kind of repeated calls we get, the repeated messages we get. I think that is a given, but let us not forget the fact that banking today is not what it was, say, 10 years ago or maybe 20 years ago, when I would go wait at the SBI branch for maybe 45 minutes to get my, 5,000 rupees withdrawn. And I mean, we have come a long way from there.
I hope it's not our bank. No, I don't want to comment on another bank, but I can tell you that we are really putting a lot of focus on service, and that's that. Yeah, thanks.
But how do you, I wanted to ask this, when you talked about open banking,
Yes.
and you said, we are a pioneer in that. My question,
the country is a
the
pioneer.
country is a pioneer.
Yeah.
So I just wanted to understand, the kind of efforts that you are doing to proliferize this, because, there is still a lot of questions in the minds of consumers, regarding the adoption. And there's a lot of skepticism around.
See, Arun, every technology has, the concept of the slow adopters and then the early adopters, and it really takes off. This open banking is very quickly catching up. Because India has developed a really good architecture thanks to Reserve Bank of India and thanks to the efforts of government and thanks to developers ecosystem developed. Now, people are coming, if they want a loan, they click, they give access to other accounts because they can see value. Wherever people see value, they will adopt a technology. And of course, when it gets critical mass, it grows. But I can assure you that this is growing very fast.
Okay, thank you so much, Mr. Vaidyanathan.
Yes,
do
I
we
can see
have
the hand
time,
there,
or we are
Yes.
running very really short?
Yes, you can just give it.
I think we'll take one last question. Yeah, that gentleman there.
Yeah, Mike.
Sir, respecting your marathoning skills and finance skills, a unique combo. Lucky for all of us.
Thank you.
Congratulations.
Thank you.
I'm talking very simple but very hard-hitting basic questions, sir. Telecom is under government, banking is under government, and all digital cyber police and local police is under government. Can banks, telecom companies, and government own some ownership at some point of time for cyber frauds and cyber crimes which are growing galore? And if so, when and is there some serious initiative by IBA and telecom company and our police? Because common man really is a victim, but then he's being harangued by banks ki bhaiya ye galti teri hai, you have to pay for it. And the fraudster is enjoying. It's a sad commentary for a common man.
100%.
I'm not saying he's not mistaken. There are mistakes happening by common men, but the larger dirty game is being played by fraudsters who is creating these victims.
No,
and this is everyday sob story, and there are no reports with details like a developed country.
No, let me just say something. That first of all, from the point of view of the person who has been conned and maybe clicked on a get quick rich scheme or anything they clicked and lost money, it is very painful for them. Oftentimes, they could be people of the lower income profile for whom losing even 50, 80,000 rupees or 20,000 rupees is very painful, sets them back very much in their life. We are sensitive to that, and I think that the government, of course, education programs, every bank is putting out advertisements, don't share ID, don't share OTP, etc. But I think, I don't remember the number offhand, so 191 or this 3-digit number, where 1930, where citizens can call and say, this has happened to my account. And there is some central authority which is then connecting the telecom companies, the banks, and they're figuring out that money has gone from X bank to Y bank to Z bank, catching the trail, blocking the money. And that service has started. So therefore, there is, let me say, a concerted effort from the government, but our own, over time we have to do better. Talking of digitization, one of the other conversations, we find that with all the benefits of digitization, one of the downsides or one of the limitations of digitization is that there is always some bad actor sitting there who's trying to also hack to the process, and that makes it that much more important to address that issue.
Okay, thank you, Mr. Vaidyanathan. It's time for the next session. We have already the esteemed speakers come here. I think a lot of you know Mr. Vaidyanathan so personally that he's also a marathoner. Someone was mentioning it. He's completed 38 marathons. So I think there is still a lot to come. So wishing him all the best in this long race that he is in. Thank you so much for your
Thank you.
presence.
Let me correct that. Make that 32, by the way. So,
The banker is always precise.
on a lighter note. But anyway, but anyway, thanks very much to every one of you, and for many of you who even said any good words. So thanks for that. Some of our colleagues are here, Chinmay and all. So if you felt any of the questions are unaddressed because of the shortage of time, you can just reach some of them here. But thanks very much, and anything that we can do for you to make your experience better, let us know. Thank you.
Thank you, Mr. Vaidyanathan, for sharing with us how consumers can actually truly own their own personal investment journey. Now, I would like to call Dr. Joyita Chatterjee, Dean Academics, Professor and HOD Marketing at NL Dalmia Institute of Management Studies and Research, to present a token of appreciation to Mr. Vaidyanathan. Moving on, our next session is a fireside chat titled A Changing Landscape. Moving on, our next session is a fireside chat titled A Changing Landscape, Technology and Innovation in Financial Services. The session will delve into the transformative impact of how technology has enabled us to prioritize customer needs, which many of you did not agree, but nevertheless, and has democratized investing for millions of people across the country. Joining us for this discussion are Rajiv Anand, Deputy MD, Axis Bank. Can I have a round of applause for him, please? And Manisha Girotra, CEO of Moelis India. Welcome, Mr. Anand. Welcome, Manisha, ma'am. Steering this conversation will be, again, the managing editor for India Today, MG Arun. Over to you, MG.
Good morning. And again, we are going to sort of continue the kind of the tone that we had set in the morning, which has to do with technology and innovation. And we heard from Mr. Vaidyanathan some of the measures that Indian banks have been taking. We know that there are certain rough ends that need to be taken care of, but nevertheless, we are on a journey. And we have two eminent speakers with us. We have Mr. Rajiv Anand, who is the Deputy MD of Axis Bank, who has put in a very long stint with Axis Bank, and I think he's best poised to let us know about some of the measures that large banks such as his has been taking on this front. And we have Ms. Manisha Girotra, who is a very well-known name in the investment banking circles, and I have known her for a long time. I mean, although I haven't interacted much with her, but as a financial journalist, we keep to get her name when it comes to some of the big deals that happen in the space. So I'd like to start off with Mr. Rajiv Anand, maybe just to step back a bit and look at the broad story of growth as far as the country is concerned, which is helping probably the financial services space. I would like to know what is your level of optimism when it comes to the financial sector, and banks such as yours, how it is looking at the way the economy is shaping up. What are the opportunities and what are the challenges? Maybe that could be a good opener to have. Then we can come to some of the specifics.
Firstly, thank you for having me. I'm absolutely delighted to be here. I think there is all-round optimism about the economy. I think when you look at it from a global perspective, as I talk to investors, when I talk to local investors, when I talk to my clients, whether on the SME side or on the corporate side, there is all-round optimism because of the fact that inflation is in reasonable control, unlike in the Western world. There is strong growth. I mean, we can argue on whether we will grow at 6 to 7 or 7 to 8, but those are kind of numbers that the Western world is clearly not seeing. And I think most important, there is political stability, or we certainly hope that that is what we will get delivered on 4th or 5th of June. I think if you put all this together, and add to that the tailwinds that have gotten added because of the fact that there's been so much of hard work that's happened over the last 10 to 15 years in terms of the amount of infrastructure that's got constructed. Roads have got better, ports have got better, airports have got better. As also the topic for today really is the digital infrastructure that has gotten built. I think will certainly hold us in good stead as we go forward. I think what is also appreciated is the fact that the way that the government and RBI managed COVID and its implications on the financial sector has ensured that we've come out of COVID in a much stronger position. SMEs are in much better situation thanks to the ECLGS scheme. The fisc is in much better control, unlike in the Western world where, for example, in the US, fiscal deficits are currently running at 8%. And we've got an environment where revenues are growing, fiscal deficits are actually in pretty good shape, and we have money to invest as well. So I think corporate, SME, retail, which are the three segments that we have, I think in each of these segments there's all-round optimism. And ultimately, I think banking is a microcosm of what is happening in the underlying economy. Growth is good, margins are good, the credit environment is benign, and I think therefore it's a great time to be a banker, really.
Great. Ms. Manisha Girotra, you are a person who keeps looking at opportunities both in India and elsewhere, and you are in touch with so many investors. So I would like to get a sense from you as to what is the kind of, how upbeat are investors when it comes to, investing in India? Also, what are probably some of their concerns in this country?
Thank you, Arun, and thank you for your kind words. I think, I'm in this unique stage. I've worked in India investment banking for 32 years, and I'm in this unique stage where, for the first time in my career, global investors are more positive on India than we are. We tend to look at it as a glass half full and say, oh, these things could be better, those things could be better. Our growth needs to be 9%, not 6.8%, etc., etc. Currency needs to be stronger. But they look at us and say, look, what you have, none of us have. Most global economies today are growing at sub 2%. Some are are degrowing. There's just no capital coming into these countries. People aren't willing to work. The population is aging. So for all of those reasons, we are seen as a very attractive destination. Young population, skilled workforce. I think where we have really differentiated ourselves from even China is that while China became the factory of the world and we as China Plus One are trying to compete on that, what we are also offering in addition to a low-cost destination is really skilled, upskilled and reskilled workers, right? So we have the potential to become the R&D hub, to move up the value chain, to, have AI-enabled platforms. Our startup ecosystem, of course, nobody needs to reiterate what a great job they've done. So people are really optimistic on India, want to put capital into India. Today, our FDI is about $650 billion. And again, another thing that's very positive that's happened from a foreign investor point of view is that earlier in the first 15 years of my career, you would only see FII inflows, foreign institutional investors coming into the stock market. While that's great, that's money which can fly away, the minute the currency drops, the minute there's a bad outcome in elections, etc. What's changed now is that we're getting strategic capital. We're getting foreign strategic companies, private equity, which has much longer gestation, sovereign wealth funds, which look at, an investor like Temasek has gone and bought a controlling stake in Manipal Hospital. Sovereign wealth funds don't do that. They buy minority investments. CPPIB has gone and bought Renew Power, a controlling stake. It's unique to sovereign wealth funds, but that's the kind of comfort they have and that's the kind of way they want to play into our country. And that's why we are seeing more and more strategic capital coming in. So I remember I joke with my boss and founder Ken Moelis, and when we started Moelis, India used to be the appendix on page 431 if I went to Norway for a presentation, and I was lucky if I got 4 seconds, right? It's like literally I pointed to the map and everyone said not interested. And today I'm front and center. Global CEOs globally want to have calls with me just to understand, who are clients who want to understand India. So it's really a great time, as Rajiv said, to be, showcasing your country to global investors, just kind of because of the kind of optimism. Concerns, I think the concerns, of course, are the usual. Geopolitics is a big concern. We are now a very open economy. So people are worried that, if there's something goes wrong in geopolitics, commodity prices go up, oil prices go up. Those are always the concerns. Election outcome, I think while we are all factoring in a very positive outcome, people do want to see that happen. People do. I think one of the most important things that people see for us in a world time like this is that we offer a stable political framework, which very few other countries offer today. We offer a strong political leader. We offer, in addition to all that Rajiv said, we offer a very strong and robust policy framework. Our regulators, RBI, SEBI are really on the ball. Innovation is right up there when it comes to these regulators. So I think all of that is a positive, and investors want to keep seeing more of that. Because if you remember, Arun, when you and I started, that wasn't the case, right? I mean, policy changes were like, let's increase FDI in telecom from 26 to 49%. That's all it was. Now we made systemic changes through GST, DMON, RERA, etc. So strong changes have been made, and investors want to continue to see that. And for that, they want to see continuity of government.
That's excellent. In fact, we would like to see, how this is transformed the banking sector itself. Because, when we talk about the banking sector today, it is no longer the fragile, ecosystem in banking that we talked, say, a few years ago, where, we had huge NPAs and there was so much of uncertainty around, and, banks collapsing one after the other. I mean, it's still a cautionary stage. I wouldn't say everything everything is beyond us, but at least we are in a better place for now. I would like to know from Mr. Rajiv Anand as to in this particular ecosystem where things are looking better and finer. How do you address the needs of the financial needs of the rising financial needs of the modern consumer? How do banks like you, like yourself, shape up to tackle those, and especially on the personal finance side, which is a big area of interest and precisely the reason why we hold such events. Maybe that would be a good way to look at it.
So let me take the first part of your question. Actually, I think that's an important one that you raised. Just 7-8 years ago, in India, we had a twin balance sheet problem, which means that corporates were over leveraged, and as soon as you saw a slowdown, you saw companies begin to default. And similarly, on the bank side, banks were undercapitalized, dealing with a huge amount of first recognition of NPAs and then, so the whole resolution process as well. We've actually come through that very, very successfully. So you're in a situation where corporate balance sheets are in probably the best shape that we've seen in a decade. Leverage is low, and therefore, and cash generation is very high, and therefore you're seeing, profitability show up. And I think, the newspapers keep talking about the fact that we are hitting 70,000 and 75,000 on the index, etc. But I think to some degree it is also a fact that corporate profitability continues to be, fairly strong at this point in time, and therefore, at the end of the day, yes, there will be pockets of exuberance, but by and large, the market is a reflection of what's happening in the underlying economy. Similarly, today banks are, when I say banks in the wider sense of the term, both public and private sector banks are very well capitalized. The NPA problems are, sort of behind us. And the credit environment, like I mentioned earlier, is quite benign. And so therefore, as we think about 7, 8, 9% growth, the ability of the corporate sector to create new capacities exists because their balance sheets are clean. The bank's balance sheets are clean, and therefore they have the ability to lend as well. And I think we are really in that virtuous circle at this point in time to be able to power growth as we go forward. And I think all of us have learned our lessons from the previous cycle. It is not as if underwriting standards are going to change just because the world is looking much better. I think banks have become a lot more conservative in terms of the way that they're writing risk, the way they're pricing risk, and the way that they are documenting risk as well. So I'm quite optimistic about the fact that the banking industry will continue to do well as we go forward. Coming to the retail side, I think the retail side has been a paradigm shift over the last 10 years. It's all digital. 70-80% of transactions now go through digitally, either on internet banking or on the mobile app. I think in the previous session, people spoke about the fact that maybe we've not moved far enough, but I think it's a function of customer expectations changing. We've come from a world where people used to take one-day leave to do bank work, as it was called, to update your passbook, withdraw 5,000 rupees, get a new checkbook and such like. And today you're in an environment where you can make payments on a Sunday evening to whoever you want, whether locally or globally. You can update your address on the mobile app. You can buy a new credit card or a loan or whatever it is on the mobile app on a Sunday evening. And I think fundamentally we've moved a huge way in terms of being able to serve the customer digitally. And I think if we didn't do this, we're in an environment where customers are buying dosas on Zomato and getting a cab on Uber. And if those are the customer expectations, and we think that we still want customers to generate paper and come to the branches, we would have died. And so therefore, I think it is fair to say that that banks in India have certainly kept up with changing technology and changing customer expectations. And I think ultimately this is a journey, and we are well and truly down this journey as we go forward.
Wonderful. I mean, that is so true, because I think it's the need from the customer that is driving a whole lot of businesses centered around it, and the customers no longer have the patience to take a day off to go to the bank. I mean, that's absolutely true. In fact, there have been so many people who have been apprehensive about digital banking, and I think that still exists. And in the previous session also, we addressed some of those areas where, the cybercrime and cyber frauds. I think that's one part which needs a lot of, attention, etc. So maybe we'll come to that. But I would like to take Ms. Girotra, bring into the picture, the way the personal banking space has enormously changed. I know you look at the merchant banking part of things, but as a person who has been in the banking, in the financial segment for so long, would you help us capture some of the big changes that are going on behind the scenes when it comes to, dealing with the customer?
Sure. I think, just to step back, when Rajiv was talking about the changes, my dad used to work in a state-owned bank and, he was posted in Himachal in Simla. And he was very passionate about taking me and my brother to just see all the branches. Those 10 branches used to be open to basically get, in remote areas to get bank deposits, etc. So we used to go with him to the remotest areas and in Himachal in a rickety jeep. And one of the times we went, he had gone to meet the villagers that he had given financing to for their cows and buffaloes. And when we went there, the villagers said, we cannot repay your loan because all the cows and buffaloes have died. So my father and the team were shocked and said, how did they die? I mean, nothing's happened. There's been no famine, etc. And they said, you can come and see. We have new cows and buffaloes, which we've taking loans. And what they'd done is that basically the bank had actually stamped the horns of the cows and the buffaloes and they cut off those horns. So basically there was no way the bank could recover the money. So from there to, I heard earlier that we were complaining about the fact that, there's too much KYC, it's too cumbersome. I think for banks, life has come a long way. And why has it come a long way? And what is it, Arun, to the point that you were asking me earlier, that what people really admire is the digital public infrastructure that we've created, right? The government-to-person direct transfers that we're doing now. We've done about $360 billion of subsidy transfers, saving about $35 billion for the government, which is literally like about 1.4% of the GDP. So I think that strong, robust ecosystem that we've created at such a low-cost, effective way is what the world admires. They haven't been able to do it, and we've done it. We've actually fast-tracked it, right? The World Bank says we've basically, brought financial inclusion up from 25% to 80%, and we've fast-tracked it by about 47 years. So that's the kind of fast-tracking we've done, thanks to just it's thanks to what the government has done in terms of creating the infrastructure. The jam trinity, we all know that, right? What has happened? The 50 crore Jan Dhan accounts, which basically have brought so many more people into the ecosystem. Aadhaar, each one of us has an Aadhaar card. We don't even think about it. We just use that for every sort of identification. I can now travel from Bombay to Delhi just with my phone. I can pay everything on my mobile phone. If I forget my wallet because I'm taking an early morning flight in a hurry, I'm not in a panic because I know I have my ticket on my phone, I have my identification on my phone, and I have money on my phone. All of this has happened in the last 7 to 8 years, right? I mean, till 10 years ago, we lived in a very, very different world. So I think that's what the world admires about us, the way that we have been able to bring the bank to the individual, right? Whether it's personal finance, retail finance. I think the CEO of Uber said, right, recently that we are the most difficult customer in the world because we want everything and we want it free. Right? And that's what these banks are delivering. So you have to respect them for that because they're delivering the best-in-class service in a challenging environment where the country is so widespread and diverse, where people have such different requirements, but they also they want to pay in the most competitive way. So I think every global client I talk to, for example, I advised Vodafone on the acquisition of Hutch in India, and they had this huge thing about teach Hutch India. It was called Hutch India, and so bring the best global practices of Vodafone into India to teach us Indians how to run a business. Today, all my clients have the reverse program, which is that learn in India, learn from your businesses in India, and they take those practices to the world because it's amazing what we are able to do. Competitive, low cost. We are all very highly demanding. I know this now. One of the customers said, when am I going to stop this eKYC? Because we are done, right? We don't want anything. So we've leapfrogged. We've taken what we've got and we're like, we want more, which is right. We're a young, hungry population. We want more. And all credit to the likes of Rajiv, etc. That I can sit on Sunday evening, do what I like because I know he's working on Sunday evening to give me that innovation, right?
Well, I mean, banks have changed so much. I mean, when you walk into any kind of branches today, I remember, 15 years ago, when you walk into a bank branch, it would be to withdraw money or deposit money, and you'll have to wait, and you'll identify the thing, and then you write your stuff. You borrow a pen from somebody, which you'll sometimes never give back. But all this happens in a bank branch, but today you have those kind of things are there, those counters are there, but I think the majority of the staff is there to help you look at services. So if somebody approaches you, do you have a demat account? What do you do to open a demat account? This is the kind of things. Do you need a personal loan? And so it's so much of service oriented. And I would like to come to that, with Mr. Rajiv Anand as to some of the specifics that, for instance, an Axis Bank is doing on this front. So suppose I'm a customer of Axis Bank, and what are some of the interesting products, for instance, that you would be having?
So banks have a lot of data. We know a lot about you. I mean, as soon as you start to fill the form, we know what your name is, your demographics, where you stay, your income levels, etc., are increasingly getting focused on using this data to be able to serve you in a much more intuitive manner. And therefore, what is called hyper personalization. And so therefore, the mobile screen that you're using, I am using, will be very different from the mobile screen that you're using. The kind of offers that I'm making are based on your data patterns that I am seeing, as opposed to offers that are being made to me, which is based on the data patterns that I have. There is no point, giving you golf lessons when you have no interest. But maybe I play golf, so therefore making offers on 3 golf lessons or whatever it is becomes much more important to the customer, and the customer begins to realize that maybe the bank is working for me, and that is, as you hear customers, they don't want to be a number. They want the bank to treat them as a single individual and serve me accordingly. And that is really what we are working towards. And if you look at, like I said, if you look at the mobile app, I may not necessarily get a offer for a personal loan, but you may get an offer for a personal loan because of the patterns that we are seeing. We will nudge you, and we are using a lot of behavioral finance as well to be able to nudge you in one way or the other. We will make you, if you look at the mobile app, it will tell you that people like you, I mean, what you see on Amazon, for example, banks are able to do now thanks to data. And so therefore, this whole process of hyper personalization, I think, consumer companies have gotten this much better. A Starbucks and, such like have got this much better than banks, but I think banks are leapfrogging down this road as well.
Okay, wonderful. I think we'll have time for maybe one question or something from the audience, because we have a very interactive audience out here. I hope it's not just complaints, but it's also some. So there is no question now, is it? Sure.
Having a banker in the room and not getting complaints is a contradiction in terms.
I wanted to ask about Access credit card, but you said no complaints.
That is too specific, I suppose.
This question to Mr. Rajiv. Now at time, there are all the banks use the same type of technology, and using the same type of technology, they use the same type of services also, personalized or otherwise. So how not for the IDFC first? That is the first question. And the general question is this, that yes, I agree that economy is doing very well, and GDP is touching 7, 8 and 9, may go to 9. But GDP per capita throws a poor figure. And that shows that the economy is growing in the K-shape. So some sections doing very well, some sections do not that good. So what is the solution for the economy grow not to the K-shape but the U-shape?
So I think the first one is a great question. I think every bank has a digital strategy, because I think it's a question of survival. If you don't have a digital strategy, you might as well not come to office, because you lose customers on a daily basis. But I think customers that are able to better understand the customer will win in the long run. Customers who are able to convert data into intuition will win in the long term. Banks were not very focused on what is now called UI UX. I mean, the way that you interact with the mobile app, there's a lot of science involved in that. And we want to make it as simple as possible for you to be able to transact on the mobile app. And you will find that, I mean, very often you hear conversations ki, this bank's mobile app I find is very simple and easy to use versus, some other bank. There is a lot of science and effort and work and innovation that goes into being able to make that as simple for you as possible, that such that interaction between man and machine becomes second nature for you. And banks that are able to do that will win in the long term. And I also do believe that people will choose banks because of the mobile experience or the digital experience that a particular bank is able to create. And we are already seeing that. Yes, particularly on the liabilities side, ultimately we're in the business of trust, which means that you will put your life savings with a particular bank because you trust that bank and because it has the distribution capability that, Manisha spoke about branches in deep Himachal or a branch next to your office or the train station or next to your house or whatever it is, gives you comfort or trust in that particular entity. So hitherto it was about brand distribution and trust. I now add digital and digital capabilities to be able to attract new customers. Why attract new customers? To sustain your existing book as well.
I think the other part of the question.
Yeah, I'll
Ms.
quickly
Pan-
answer. I know time's up. So I think, look, the K-shaped question you asked is very relevant in somewhat more developed economies. What do we need as a country today to do exactly what you said, which is increase and improve the GDP per capita, which is low? There's no question about it. Is that we need to create more employment. We need more industry. We need more de-risking from China, more global manufacturing coming, more supply chain shifting here. So I don't think we should worry so much about the fact that there is a concentration of wealth at the top, because don't forget, along with the concentration of wealth, we have created a fabulous 400 million urban middle class, which is actually getting wealthy, which is actually spending. You're seeing the kind of experiences they want, the travel they want, the kind of weddings they're having. So incomes, and that's leading to a lot of wealth redistribution. So I think our priority, and why is the government spending on infrastructure the way they are? Because they're trying to create jobs at the lower end in construction, etc. So our priority through the digital public infrastructure, where we're effecting a redistribution through the kind of employment that we are creating through public capex and private capex, is to create more employment and lift the lower end. In a country of our size, we're not going to become rich at a GDP per capita level by doing a trickle down. We have to lift the bottom up, and I think that's what we are doing effectively. So we shouldn't worry too much about this K-shape, which I know the Western economists love. I think we have a different model, and that model is let's lift as we climb.
Thank you so much. I think time is up. Unfortunately, we don't have time for more questions. We can always try to get the speakers backstage if possible, if they have time. We will...
Let's have a very big round of applause for this.
Thank you so much. It's a good compliment. And let's move on to the next session.
Thank you. Thank you, Mr. Anand and Ms. Girotra, for setting a very positive tone, talking about how we don't have to worry about K-shaped, and that's a very strong point. I would like to call Managing Editor for India Today, Ranjit Sahai, to hand over the token of appreciation to our esteemed guests. Bye. Thank you. Oh. Moving on, our next panel discussion, Driving Transformative Changes in Financial Services, will delve into the systemic shift in investment patterns of consumers and how financial services organizations can tap the underserved and underbanked segments to drive financial inclusion in the country. For this session, I would like to request our distinguished speakers to come up on stage. They are Mr. M. Narendra, former Chairman and Managing Director at Indian Overseas Bank, and Ms. Riddhi Durgasi, co-founder Lakshmi. Can I have a round of applause for the speakers, please? And for this session, I will be taking on the role of MC as well. Welcome, Mr. Narendra, and welcome, Riddhi. Yeah. So in the last panel, we spoke about, the big picture, right? We spoke about investments coming into India. And Mr. Vaidyanathan also spoke about retail investment. Now let's talk about the underserved segments, right? And but before we begin, let's just have one of the systemic shifts that's happening in the country right now is how consumers today are more interested in equity and mutual fund and rather than savers. So how is this shift impacting the banking industry? And what strategies can banks adopt to this changing trend?
Yeah. See, in the sense today, customers will have to always look for maximizing their return.
Right.
So, in view of that, in the available various instruments, they have to also see what is the risk trade-off. So, if they have to move the resources which they have given the bank as a deposit, and later it goes to a partially for mutual fund or equity, in a sense, they are looking for better return. And that would also, so we ourselves also, banks now, advise the customers that what should be their planning for a better mix of what you call saving instruments or investment instruments. But one thing is that the customers will have to be always given that much importance in the banking sector, and we must understand the depositor's franchise value, customer's franchise value, and we cannot take the customers for granted. So even though the customers are looking for safety, security, and sovereign, of course, a few public sector banks are sovereign, but in some are, of course, it is owned in a private also, but the safety, security is also important. And inflation-adjusted return on capital or their investment is a very important. So during the COVID, actually, what has happened is inflation was, even though high, the Reserve Bank has to bring down the interest rate very low just to give a boost to the economy. They also pumped in 12 lakh crores of cash to the system. Now, when the inflation is suppose average 6% and your rate of interest by the RBI is 4, banks took the advantage of the liquidity and provided very low rate of interest for the fixed deposit. I was at that time, of course, I am a retired banker in a way. I was also looking for maximizing my return. So that being the case, it was a negative return. So sometime in that process, the banks took for slightly longer period without the proper return to the depositors. So it has been taken advantage by the other, what you call fund managers and others, by suggesting them, why not you go for mutual fund? And also some of them went for direct equity. And one more thing is, the young generation which are coming today, they are also looking for, even at the cost of risk, some fancy return. So in view of that, they are also today, banks they use as the mode by which these investments take place. But one thing is to be certain that you should also be aware that ultimately the funds come to the banking system. Even though it has gone to the mutual fund and they have crossed 50 lakh crores now, their overall portfolio, and thanks to their big advertisement campaign by the Mutual Fund Association, it has reached to the, as you rightly said, even at the village level or the agricultural owner or everywhere, they are also now wanting to know what is this mutual fund. It must have reached. That is a good thing. Happening is good. But at the same time, because yesterday and all, people are enjoying 75,000 index. But the index doesn't take much time to come down also. When in COVID, we have seen 25,000 also. And I have started the career when I was a treasury head. We have seen 3,000 index, and lot of equity investments were to be written off by me. Because that time, all the technology companies were doing, everybody has invested, but ultimately didn't do. But that again another phase. But we are not thinking of that period, but that is where somebody who well-versed, he himself can invest 10%. So what is that percentage you want to allocate? Even in your own public provident fund, the government allowed only some 15% to equity and balance in the debt, because they also would like to see. And even in debt also, quite a lot of people have, by going for higher rate, the same, some big names also I can say, but we will not tell the name, suddenly collapsed. And the bond which you thought it is good return, except public sector, private also may have, even in fixed deposit of corporate also, you may face problem. So to what extent I am also, today I have, being not in the bank, I would also to say that a passive, somebody who is not really wanting risk, bank is the most important source of resources. But if you would like to have some higher return, at the same time some risk, you should necessarily take this equity or bond also, or the mixed, that is where mutual fund, because they know much more than, and they deal with the day-to-day matter, so they are better in a position to get a higher return. So in a view of that, but we need not worry. This is the only, but the only thing is, the other side, individuals are also encouraged to go for more and more debt, means contracting credit. And it has so happened that the savings at the general level now has come down, where we are going towards US or developed country where individuals are making lot of debt. So debt is required so long as the debt is used for productive use. But if the credit is not used, so to that extent, you have to also be sure that the saving habit has to go more. People have to, the people at the bottom also, as you rightly said, they have to be conveyed as the saving for current, for future, even young generation, because the prime age of your life is sometime where you earn very well. But after some age, you may not be really valued in any of your organization. So that period, whatever you save when you young, that will come. Because the current consumption, the government wants you to do a lot of consumption. Madam said, high brand, all that or something, we do good investment, what you call encouraging. But you have to know wherever we can stretch. And to that extent, always money in your hands, in the way of bank or anywhere, that is the most source of your safety, rather than you are depending on somebody else will help or somebody will help, parents will help, nobody will help. You have to save for yourself. Yes,
Okay,
madam.
thank you. So that was, thanks, Mr. Narendra. Before that, we do have some women in the audience. So how many of you do you invest? And overall in the audience, how many of you invest in mutual fund stocks?
Yes.
Very interesting. Okay, so Riddhi, my next question to you, and before I ask you about if women are a part of this whole India's wealth creation story, I would like you to talk a bit about Lakshmi, and because that will actually help put context to when you answer the question. Yeah.
Thank you, Sonal. So Lakshmi, I'm one of the co-founders of Lakshmi. Lakshmi was started by Preeti Rathi Gupta. She comes from 2 decades of experience in the wealth creation industry. They set up Anand Rathi, doing exceedingly well in stockbroking, wealth, insurance as an NBFC, various things. And what she realized is women are not a part of this story. Women are not a part of the growth story. They are not using everything that is happening today for their own financial security. So that's how Lakshmi came about. It's a financial platform for every woman in India to ensure she builds her safety net and achieves her financial goals. And basically gets, we were talking about fraud earlier, and there's so much happening, to really provide a safe space for women to achieve her goals. So that's about Lakshmi. And I'm so happy that, you in India today is asking this question. Because so far when we were talking about underserved, it was a lot about rural India and the farmers, and which is very true. But, and I use this line often, 50% of our country is women, and the balance 50% is given birth to by them. And still, they are not a part of online platforms. There are so many great companies building technology, but less than 10% of their audience is women. Right? So are women a part of this wealth creation journey? And that's a great question, because we did a survey of 4,000 plus women with Access My India, right? And they're the front runners of research in India. And it was so sad to see that women are fabulous savers, fabulous budgeters. Whether you give them 5,000 or 50,000 to run their household, they will make sure everyone is happy. All the bills are paid, their children have everything, their husbands are happy, their in-laws are happy. but they don't plan for their own finances. And what they do save, right? They will put away some money in their cupboards or in their savings account. And women are great for banks because they have all their money in savings accounts or fixed deposits. But the problem is that money is losing value to inflation. So they are great budgeters, they are great savers, super smart savers, very organized, fabulous multitaskers, but very few are accessing the capital markets. And capital markets are wealth creators, right? So every woman should have a retirement plan. But as per our survey of 4,000 plus women, 98% of women had no retirement plan. I mean, that's really scary. And if they invest only in an FD, their money is actually losing value over time. So they're working so hard to earn every rupee or save every rupee, but not accessing the capital markets. It's very difficult to build a good enough retirement
And I
plan.
believe this 98% is not limited to rural India. It's an urban India
Not at all.
women
Absolutely.
demographic, right?
It's urban in India. In fact, when we did the survey, tier 2, tier 3 city women were slightly more investing in the capital markets than urban women. And our survey was across tier 1, tier 2, tier 3 towns, across ages, across personas, married, unmarried, with kids, without kids. So it was across India. And again, like I said, what we're building at Lakshmi is for every woman in India. So it's not for the HNI, it's not for rural, but for every woman in India, even if she can just save 100 rupees a month.
Very interesting. As we, speak about, about the whole gender lens to investment, Mr. Narendra, I would like to ask you now about, in the earlier panels also, there was this whole conversation about technology, right? And technology to some extent has democratized access, right? But having said that, banks still, there is this reservation. And I think in the earlier panel, Mr. Anand did speak about how banks have actually become conservative, right? But what do we now need to do to make credit more accessible? Because there is so much of alternative data now available. And a lot of times it is said that smaller businesses, women who actually need loans and productive loans do not get access to it. Over to you, sir.
Yeah, in a way, the maximum information about our whatever individuals, no, the banks possess that. That is because of their overall dealings and how, where and what they do with their money and how they earn the money, all that, no. So in the life cycle of customers, our banking gets engaged. So when you know that the life cycle, then you will also know where are all they have the gap, where they can get the necessary input of credit. And that will enhance their value proposition and also their business proposition if they are in business. If they are in, as he rightly said earlier also, if they are in self-employed or if they are salary employed, everywhere, in the life cycle also there will be demand for additional funds. Somebody may be wanting to send his son for higher studies abroad. Naturally, even a villager today wants the children to get very good education. Now, if that is the case, as a rural branch manager, through technology or through personal visits, along with this agriculture and allied activities, what else could be done in his house with get good education, and the children either by the abroad coming or from Indian higher studies coming, getting into the mode for urban life and getting extra remittance, either NRI remittance or this remittance to the family. Family will also little later will like to change their house. Why should the rural hut, where, no problem. There is so depending on the climate and other things, they need to change their house. So can that be again another input bank can give? Or if the rural today he is only on the the agriculture seasonal variation. Why not we encourage them to go for allied activities like dairy farming, poultry farming, sheep rearing, all that. Or somebody also government is giving aspirational district, one district, one product, and they are also promoting rural industries. So why not the banker become that these schemes are there, why not you take advantages? So through technology, through personal touch, and in that, the entire the data available with the bank, you can make the customer to get engaged in productive activity, so that their entire contribution to the GDP can go up. So I know when I see this GDP growth, really the underlying GDP growth is much, much larger. The potential for the GDP is much, much larger. So can the bankers become little responsible enough that I am not only on the one side of the liability, I am only in the credit side, a few customers. No, you have to necessarily ensure that your that areas expanded, whether in the women empowerment or in the rural artisan empowerment or rural agricultural empowerment, rural micro industries empowerment, and even in the slum area today, if there can be economic activity provided to them, they are also, because they have also right to have a better life. So in view of that, banks has to think little beyond the traditional level, and with the change of technology will help them, and analytics and other modes of artificial intelligence, machine learning, all that should be used for productiveness of their business proposition. Then the growth and the profitability of the bank can also go. And bank can charge reasonable. If he is earning, he is willing to give. Today, interest rate alone is not the criteria for a business. Interest is one part of that. So even there, of course, competitive being there. So in terms of our operational efficiency, if you do, you will be able to give much return to the depositors and also get better return from your borrowers, so that your profit margin can be maintained. So in view of that, nothing is today as earlier no priority sector, everybody would have thought it is as a very burden on the bank. But I see wherever these are all very productive activity for the bank, and every scheme of the government, banks should get involved. Because without the bank's involvement today, bank will expand to so much. Every activity, economic activity, there is a role for the bank.
Thank you. And I guess this is actually the space where a lot of new age fintech companies and startups, have actually done commendable job. So Lakshmi, so Riddhi, can you talk to us a bit about how a lot of platforms like yours have actually made even not just investment journey, but also credit accessible to women? And what are these alternative lending models, or even how when women access loans, what is the differentiation that normal traditional legacy business banks were not able to offer?
So I think there's a lot of things you're doing differently, right? First is support, right? And there's a lot of socio-economic conditioning. Women are like, we are not good money managers. Men are way better at managing money. First is support, ensuring they have the right kind of people who will help them, right kind of advice that they get on our platforms. We have a community of women where they can go ask questions like you rightly said, right? There are good reasons to borrow for and not so good reasons. So where there's an ecosystem of women which help you get that right support. Second is literacy. We do a lot on literacy. Why is it important to build your credit score? Generally, women think, oh, it's bad, I don't want to borrow money. What if they come after me, my assets, etc., right? But it's important to build your credit score. What's a safe way to build it? For the unknown, like you said, about child's education, you might need to borrow at some point. So the right kind of literacy, simplified literacy for underserved segments like women. And the third is access. Yes, I mean, there is so many companies doing lending today, but women actually, they're not accessing financial platforms. They're not reading the newspaper. They're not listening to a CNBC. So how will they know that there are loans for them? So really targeting women for their cohorts. For example, every woman has gold, right? So now bankers are approaching them. We'll give you loan against your gold. And NPS for women are super low, so it's great for the woman and it's also very profitable for banks. Secondly, child education. Great, it's very important for women. Every year, so many women are struggling. How will I get the fees for the year in advance? As we want them to all go to international schools and expensive schools, and every year's fees are doubling. So, you actually go to schools and say, we have a platform where women or mothers can apply for loans for your children, and no mother is going to default on a loan when it's come through a school. So really access and innovative products. So that's what platforms like us are doing to enable access to credit. And it's very important, to have that access for unknown events in your life. Or even, for example, everyone wants to buy a home loan or get a house. and women being great borrowers can get that with better interest rates. So bringing them access, bringing them knowledge on what is available in the market today is what fintechs like ours focus on.
If there are any questions, I will not ask. Okay, yes, we have a gentleman there. I mean, the events are for the audience, isn't it? So,
I know that 99% of the people like to speak in English. अगर नरेंद्र जी मैं हिंदी में बोलूं तो कोई
बिल्कुल,
अतिशयोक्ति
please
तो नहीं
बोलिए।
होगी।
बिल्कुल बोलिए, जैसे आपको
1968 में बड़ी मुश्किल से 100 रुपये इकट्ठे करके मैंने अकाउंट खुलवाया था बैंक में। और उस जमाने में भी जब बैंक में जाता था, सोमवार को चेक डिपॉजिट करता था तो कहते थे बुधवार को आकर के आप विड्रॉ कीजिए, उससे पहले पैसे नहीं मिलेंगे। आज तकरीबन 55 इयर्स हो गए हैं, ये जानते हुए भी कि हमारे 60% पॉपुलेशन ऑफ आवर कंट्री रूरल में है, जैसा आप बताते हैं स्टैटिस्टिकल डेटा के हिसाब से। आज भी वही सिचुएशन है जो कि सोमवार को अगर हम चेक डिपॉजिट करते हैं तो बोलते हैं बुधवार को आकर के पैसे लेके जाइए। अब ये वो नया सूरज पूरा हिंदुस्तान देखना चाहता है कि इधर हम चेक डिपॉजिट करें। हर जो भी मिनिस्ट्री आती है, जो भी एग्जीक्यूटिव्स आते हैं, जो ही IAS ऑफिसर्स आते हैं, हमारे नीलेश जी से मेरा ये कम से कम 15वां सेशन में उनका अटेंड कर रहा हूँ, इससे ज्यादा भी हुए होंगे। तो मैं ये समझता हूँ हिंदुस्तान में, हाँ जी नीलेश जी जो बैठे हैं, तो मैं नरेंद्र जी आपसे ये पूछना चाहता हूँ कि हिंदुस्तान में वो सूरज देखने कब मिलेगा कि इधर चेक डिपॉजिट करें और दूसरे दिन या सेम डे पैसे मिल जावे।
अगले दिन पैसे मिल जाए। अभी ही आज ही।
अरे आपको मालूम नहीं, अभी तो क्लियरिंग का सिस्टम है ना, बहुत चेंज हो गया।
एग्रीड, मैं आपकी सब बात से एग्री करता हूँ, लेकिन मैं आज भी वही फेस कर रहा हूँ। मंडे चेक डिपॉजिट, इफ आई डिपॉजिट द चेक
वैल्यू
ऑन मंडे, नहीं सेम थिंग आई रिपीट, इफ आई डिपॉजिट द चेक ऑन मंडे आई विल गेट माई कैश, आई कैन विड्रॉ द कैश ओनली ऑन वेडनेसडे। Do you agree with me or not?
I agree. That is called uncleared effects. That is today's clearing what you have put. By evening it goes to the clearing, and in the early morning by 3 or 4, the clearing takes place, and the amount gets credited to the account next day. Now अभी capital market में अभी आपको मालूम हो गया ना, अभी क्या आ गया, T में अभी settlement हो गया, the same day. So in view of that, even the banking system may, that will come where the clearing can take place, because it's all interoperability. Everywhere, आपका बैलेंस दूसरा बैंक का भी इधर से मालूम पड़ सकता है. So in view of that,
55 years पहले जो सिचुएशन थी वही आज है.
I understood that. They say these uncleared effects. So uncleared effect में कोई क्रेडिट दिया तो RBI ने मॉनिटर करते हैं, that will amount to a implied overdraft. तो बट मैनेजर आपका पहचान है, कोई बिजनेसमैन आप जैसा कोई वेट करता है, आज का पैसा आज ही पैसा मांगता है, वो तो देता है।
हिंदुस्तान में सेटिंग सब जगह
तो
चलता है, वो आप भी जानते हैं, मैं भी जानता हूं।
आज क्या है बोलते हैं,
सिस्टम की बात कर रहा हूं।
आपको बताते हैं, बिजनेसमैन सुबह कैश डिपॉजिट करता है और शाम को उसको यूटिलाइज करता है। तो ये इधर हमारा कैश रहना, सुबह से कैश काउंट करके इतना सुबह 10 लाख आके आपका गाजियाबाद और इतना बड़ा बड़ा ट्रेड सेंटर है ना, करोड़ बाग, ये सब पैसा जमा किया, शाम को यूटिलाइज किया। पैसा हमारे लिए अकाउंट में कोई बैलेंस भी नहीं है और कोई यूज नहीं है। देन व्हाट वी सेड, नो, सच अकाउंट्स यू हैव टू चार्ज देम हेवीली आल्सो। दे आर यूटिलाइजिंग द बैंकिंग फॉर देयर बिजनेस विदाउट एनी कंट्रीब्यूशन टू द बैंक। ये ऐसा नहीं है। तो आप जैसा इंडिविजुअल डिपॉजिटर, आपने डिपॉजिट किया, आप मेरा पास इफ आई एम मैनेजर, आई वुड हैव अलाउड यू टू ड्रॉ मनी बिकॉज आई नो दैट मनी इज डेफिनेटली सेफ।
तो ये हिंदुस्तान की 60% पॉपुलेशन, रूरल पॉपुलेशन को कैसे अप्लाई होता है?
वो रूरल पॉपुलेशन इतना पैसा जमा करने के बाद 1 महीने के बाद ही आता है, इतना अच्छा कस्टमर है वो, तो आप जैसा नहीं है। हाँ, उसको इतना ही है। रूरल मैनेजर को हमारा पास आया, एक नारियल पानी लाया, अच्छा दिया, ही इज सो हैप्पी। आई एम जस्ट टेलिंग यू, आप है ना, वी हैव वर्कड इवन टुडे, इवन आपने देखिए कोई रूरल बैंक में मैडम बोलते हैं ना, सेल्फ हेल्प ग्रुप का 60, 70, 100 लेडीज, भाई एक मैनेजर और एक ऑफिसर उनको सर्विस देते हैं। सो इतना रूरल ब्रांच का काम का कष्ट, ये तकलीफ है ना, यू बीइंग बी सिटिंग इन दिस है ना सोफिटेल, वी विल नॉट अंडरस्टैंड, बट दे गिव दैट सर्विस। दैट इज व्हाई ही इज लाइक ए VVIP। उसका सभी फंक्शन में रूरल में इनवाइट करते हैं। रूरल मैनेजर को। इधर तो सिटी में कौन कौन इनवाइट करता है, किसको भी नहीं, मैनेजर को इनवाइट ही नहीं। अब बोलते बड़ा बड़ा शादी होता है तो कोई मैडम बताया शादी में मैनेजर को बुलाएगा नहीं इधर, तो वो तो इधर का तो मतलब का दिन ही है।
So we have
चलो
just 10 seconds, one short question. Yes, 10. Please keep it short.
Hi, I'm Jigar Parekh. There are so many different products now for the investment nowadays, right? There are so many ULIP plans, so many mutual funds, etc. Right? So it is really difficult to choose that which one is better, right? So that is where the banks are the most trusted one, right? Which we can trust. But there also means if I personally have two different accounts from two different banks, and both are saying the different things, right? So how would you suggest that, means how to trust the bank and which plan to go for, right? Because there are too many. So what are the sources of validation which we can utilize to select our investment funds? Yeah.
नहीं, ये एक है, as you rightly said, the return and the safety, security. That is very important. Second, the cultural value of the institution. आपको उधर का some of the institutions has a cultural value proposition, and in spite of all being technology, the human face of the employees, that is also very important. अभी हम कितना दिन भी हम ऑनलाइन करते हैं सभी ठीक है, बट एक दिन आप बैंक गए और आपको किसने भी इंट्रोड्यूस एक आइडेंटिफाई नहीं किया और आपको किधर भी बोला तो इधर से उधर जाओ, उधर से उधर जाओ. Such bank, no, even though after next time you will transfer all the balance to somebody else. So the human face, cultural value, then their what you call response time, then what is the perception, brand value they have built up, and how some situation of difficulty, like आप इतना अच्छा deposit रखा है, सभी रखा है, एक दिन आके बोलते हैं I need particular this type of loan. Then the manager, what is the attitude? What is his positive mindset? How he becomes a partner in your progress? How he comes through the difficulty also when you are there? How he suggests some other things? Mein mera life mein, I have given so many suggestions and idea which are not relating to banking, but people we have given, and all of them, even after so many years, today they identify that आपने ये suggestion दिया, it has come very handy. So you have to choose a banker. Another thing is, just because of return or anything है ना, आपका 10 साल का, 15 साल का, 20 साल का ये एक relation bank का है ना, some of the customers suddenly change to another bank. You don't know that another to establish that relationship in another bank, it will take time. वो तो आपको एक दिन है ना बहुत अच्छा रेट गेट में देख के करेगा. There were so many times during the sometime the foreign bank, I don't want to say, they took the account. Later, no, on derivatives they made lot of losses, and these customers were not properly guided. They came back to the public sector bank. They said that, sir, ये आपका account, even though you charge higher, I would like to be here. So I am not having any reference to public, private and all. But everybody has to be true, and they should be very transparent, and they should give you proper suggestion.
Okay, thank you.
Thank you, Mr. Narendra and Riddhi. This was a very interesting panel. And I would like to now call our Managing Editor for India Today, S. Saharanji, to come on stage and hand over the token of appreciation to our guests. Our next session is what we have been talking about, India's stock market benchmark. Now, Sensex we have been discussing is at an all-time high, led by strong investor confidence and robust economic growth. Joining us for the fireside chat on Indian stock market outlook and opportunities is Mr. Nilesh Shah, MD Kotak Mahindra AMC. Welcome, Mr. Shah. I would also like to call on stage India Today's managing editor, MG Arun, who will steer this conversation. My colleague, Mr. Anilesh Mahajan, deputy editor for India Today, will also be joining this conversation.
Good afternoon. The Sensex has breached the 75,000 mark for the first time this week. India's strong economic growth outlook amid expectations of rate cuts, healthy corporate earnings and prospects of political stability after the Lok Sabha elections have kept the underlying sentiment positive. Moreover, the growing might of retail investors is also a factor behind domestic markets' resilience amid global headwinds. Millions of investors have entered the fray since the pandemic. The total number of demat accounts increased to 139 million in December 2023, with 4.2 million accounts added in December alone. So how resilient are our markets and what kind of caution should investors look out for? To discuss these, we have one of the finest commentators on the stock markets, a person whose views are much sought after, Mr. Nilesh Shah, Managing Director, Kotak Mahindra Asset Management Company. He needs no introduction to anybody who is tracking the stock markets. He prefers to call himself a student of the market, as is evident from his Twitter description, but all of us consider him as a master of the markets. Mr. Shah, let us start with the more recent news.
And MG, if I can add, he's also advisor to the Prime Minister on the capital markets and many of the things happening globally. So that adds to his valor. Although, model code of conduct is there, and, since he's a part-time member of the advisory council, he may not be able to, say this. So we can say on his behalf that his advice is taken seriously even by the Prime Minister of the country.
Excellent. So I'd like to know from you, when the markets reach this particular landmark of 75,000, it's been a long, long journey. And for those of you who have been involved with the markets for several decades, how do you see this, and what does it convey about the robustness of the capital markets? Because investors today would like to know that. I mean, how sustainable is whatever we are seeing? Or is it that, we need to be always cautious about the volatility that is there? So your expert comments.
So one, this is like a dream come true. We were talking many years ago that there will be tsunami of retail flows into Indian market. Now we are seeing it. We were always talking that one day Indian markets will be driven by its own fundamentals and not by what foreigners will buy and sell. Today we are seeing that. And in last 8 years, market has consistently hit all-time high. In cricket, Sir Donald Bradman is the greatest batsman with 6 consecutive centuries. So our Sensex is doing better than Sir Donald Bradman. Now we must remember that with 99.94 average, Sir Don was also out about 8 times on duck. So can our market score a duck once in a while? Answer is undoubtedly yes. As investor, you need to be prepared for it. We hope and pray that never happens, but you need to be prepared for it.
But what do you think is driving this kind of buoyancy? If there is largely gloom in the developed world, which we had discussed in the forenoon also, India seems to be a bright spot when it comes to this. At the same time, we keep hearing about overvaluation in the market too. So what is the real story?
So our markets are driven today by Triveni Sangam of flows, sentiments and fundamentals. Domestic flows are very strong. SIP numbers are about 19,000 crore a month. On top of it, insurance and pension are also investing. Foreigners are also looking to buy at lower level of market despite higher valuation. So from a flow point of view, we are in a reasonably good position. Sentimentally also now, Indians are far more confident about their growth and future, and so is foreigners. And as you very correctly mentioned, we are doing well, but others are doing badly. So we look even better than what we are doing compared to others. And finally, it is the fundamentals which matter. Yes, markets are at all-time high level, but our profit to GDP ratio at about 5% is also near all-time high. And which is why valuation-wise we are not at all-time high. Now, is there a froth in market in certain segments? Undoubtedly, yes, in our opinion. There are a couple of low floating stock counters where valuations looks exorbitant. And they may not correct today or tomorrow, but certainly whenever supply emerges in those counters, current prices will be unlikely to be remaining there. So we have Triveni Sangam of flows, sentiments, and fundamentals coming together to create market, which has gone up 8 calendar years in a row. It is probably world record in any capital market. I haven't studied this in details, but I think it will be a world record in any capital market, giving consecutive 8 years of positive return.
And Nilesh, since I'm coming from Delhi, so I'll be adding a political tadka to the conversation. How much, this 75,000 euphoria, if we may call it, has this ab ki baar 400 par has to play with it? Do people think that, have they discounted, the political risk, and they are also part of the political jargons thrown by the political parties?
So undoubtedly market is discounting all the current news and future probabilities. And at this point of time, it will be fair to say that markets are optimistically discounting continuity of government with majority. It is discounting Fed rate cut despite Fed saying that we may not cut rates. It is discounting oil prices to remain in $75 to $80 a barrel despite current prices running high. And it is also discounting Nifty earning per share of about 1125, 1150 rupees. So market is today positively discounting lots of things, including continuity of government with majority.
But do you think that, this burnout may come, in nearer future rather than in a long-term side?
A lot will depend upon how world behaves. If energy prices go to triple digit, yes, there could be small correction. But history has taught us that higher oil prices are actually reason for lower oil prices because people control demand. Fed may not cut rates today, but will they be able to sustain higher rates for longer? That remains doubtful. We are doing well and others are scoring self-goal. Now, will that continue? That's one big question mark. Today, as an emerging market investor, you are not going to invest in Russia. You are very, very concerned about South Africa. You are worried about China doing something in Taiwan. So both China and Taiwan are on tenterhooks. South Korea has a risk of getting upgraded into developed markets because it is a developed country. Effectively, your choices to invest in emerging markets are very, very limited. And as some fund manager mentioned, I have top 3 priorities to invest in emerging market. One is India, second is India, third is India. And Larry Summers summed up this entire thing very, very nicely, that Japan is like an hospital, all elderly people. China is like a jail. You have one-way ticket to enter, but you don't know when to come out. And Europe is like a museum. Everything is antique. Effectively, where will you go and invest?
This euphoria and the global scenario which you were describing. So India is also probably trying to take the leverage of the situation. And a few days back, we have heard that we are also amending or agreed with Mauritius to amend the double taxation avoidance accord. And Mauritius DTA is very peculiar in structure, that Singapore DTA is also linked with it. We all understand that India wants to build a gift city, and gradually we are cutting down on many of the leverages which we had in the DTA. I want to understand from you that, what sort of impact do you see? Now we already have, seen 4 or 5 years of taxing the capital gains in India, despite the fact that people come through Mauritius route. Now withholding tax and dividends, they are also, the provisions will be amended. So what sort of impact do you see on the hot money, especially because most of the hot money which comes through it? And what sort of impact do you see in the FDI side? And thirdly, since, you don't want to mention about the Prime Minister's Economic Advisory Council, but, I am a bit greedy. I want to understand that what sort of, geopolitics you see, especially, we are cutting one sort of revenues for Mauritius, and we already have problems in Maldives, and we are struggling to deal with it. So these are the 3 aspects I want you to cover, please.
Sure. So just one clarification, all these comments are as Nilesh individual, not as member of ESCPM, because of model code of conduct.
I have given the rider that I am greedy.
Yes.
So you need not to have it.
So there is a Gujarati proverb which says, "Gharna chokra ghanti chaate ne upadhyay ne ato." We will starve our own kids and give floor to the visitor. That probably describes our treaty with Mauritius and other countries. The double taxation treaty gave advantage to people coming via Mauritius rather than directly coming into India. We have sustained this for many, many decades. And now we are trying to create a level playing field. I think that's a step in the right direction. If India has to emerge as a regional financial center, as international finance center, then there can't be non-level playing field where people coming via Singapore, Mauritius gets tax advantage or other benefits, and coming via gift city, they don't. Otherwise, why will anyone come into gift city? Now, at the same time, as big brother in Indian Ocean, do we have to take care of our neighbors? Answer is undoubtedly yes. But is the benefit to the neighbors by way of giving preferential treatment on taxation? Or it can be via creating a win-win situation where we go and invest in their countries and create growth. Now, Mauritius is strategically located. We can create a Mundra over there, which will provide logistical trans-harbor shipment to whole of Africa and Asia. Mauritius is also an agro country processing sugar and stuff like that. We can put up agro-processing industry over there and create a win-win situation. I think from win-lose, if we create win-win, not only our neighbors will be happy, but we will also benefit. So my two sum will be, we need to create a level playing field between global finance centers and local finance centers. We need to extend our influence through foreign direct investment and creating a win-win situation rather than creating a win-lose situation.
Okay, Mr. Shah, your Twitter description also has another interesting thing apart from being a student of the markets. It also says mutual fund sahi hai, in fact, true to that word, I think investors have largely put their trust behind it the assets under management of the MF industry in India is, I think it's doubled in the last 4 years. It's around 50 lakh crore. So I would like you to talk about something about the industry, some of the new products that you are sort of looking at, and how much, going by the trust that investors have been largely putting behind it, how sustainable is whatever that we are seeing as far as the industry is concerned?
So Arun, we all believe in mutual fund sahi hai, partly because we work in mutual fund industry, and partly because we genuinely believe it is sahi hai for investors based on our experience. Our business is business of managing trust, and it is very sad to note that we haven't earned every Indian's trust despite last 30 years' work. If we look at households' financial sector flows between FY21 and 23, about 9 lakh crore has gone into currency notes and 4 lakh crore has come into mutual funds. An asset which would have delivered about 20-25% return in that 3-year period has got half of what currency notes have got, which is going to depreciate by definition. So I have a long way to go and gain trust of every Indian. Even today, there are many Indians who are investing in currency notes rather than mutual funds. Why do we believe mutual funds sahi hai? Well, I have friends like Rajiv and Srini. They are managing money wisely. They are generating good returns for investors. And as long as we will have talent like that in managing money and guardrail of SEBI in terms of regulation, I think we'll continue to add value to our investors. And as long as we add value, mutual fund sahi hai.
Nilesh, I have a supplementary to this. I was reading data somewhere that India is now largely witnessing passive investments. People are investing into indices rather than investing into direct stocks. There are companies like Zerodha, they have 100% passive investor fund house. Do you see this as a new trend emerging? Or do you think that there are lesser, availability of asset classes where people can invest, so that's why they are looking for passive investments? Or do you think that there are, more retail investors coming who may not have the understanding of the scripts and valuation? So rather than going there, they are coming to the passive investment mode. So what is your feeling like?
So I think active and passive both are working together. If we look at active mutual funds, PMS and AIF, their growth is substantially higher than pure passive index fund. In passive funds, EPFO has been one large investor. If you remove that out, then retail interest is reasonably good, but not as substantial as in active funds. I think both will continue to work well for investors as long as we have fund managers like Srini and Rajiv who will add value to investors by outperforming benchmark. Active will continue to work. The day we are not able to add value, then passive will take over. I hope and pray that before I retire, active and passive both will continue.
That's great. I think the audience is very interactive out here. They may have a couple of questions, not more than that. I mean, so many hands are raising. I think this gentleman here, we can have in the front.
Good afternoon, Mr. Shah. You said that the Sensex, which has come to about 75,000 and more, one of the reasons is that profitability of companies have improved. And it also means that the cash flows must have also have gone up significantly. Does that mean that the gap between the intrinsic value of the companies who are listed in our stock exchange and the capital market value, that gap has reduced?
Very difficult to summarize for the entire market because there are pockets which are undervalued, there are pockets which are overvalued. But I will say that prices have also run up in line with the improvement in profitability. And hence the gap will be more or less averaging compared to historical standards. The large caps, by definition, the top 100 companies or top 50 companies are still trading around their historical averages.
Mm-hmm.
The mid caps are trading little above their historical averages.
Mm-hmm.
Small caps are trading reasonably well above their historical averages. And micro caps, the bottom end of the market, is trading well above their historical averages. So depending upon which segment you look, the gap has either narrowed, widened, or remained the same.
Yeah, so does that mean that due to this digitization, a lot of information have started flowing into the hands of the investors and the capital market as well? So that should have reduced the gap in general, because the understanding of the capital market, if they don't understand some information, they will go for a discount. And therefore they will be, more cautious in, stating a particular price.
Sir, information is flowing, not necessarily wisdom. Lobya hoy, tyan dhutara bhukhe na mare. Wherever there are greedy people, thieves' business will only prosper.
They want to keep profits for them, basically. Right.
See, I think we have a lot
Thank
of
you.
questions. We can all take it backstage. You all know the one-liners. Mr. Shah is known for his one-liners, but not many of you know about the songs he likes to sing. And he's going to sing something for us today. Let us hear from him.
So one, I'm not a professional singer. तो भावनाओं को देखना, गाने को मत. किसी की मुस्कुराहटों पे हो निसार, किसी के वास्ते हो तेरे दिल में प्यार, किसी का दर्द मिल सके तो ले उधार, जीना इसी का नाम है. I think this song embodies most of the mutual fund managers and people.
You're talking more like a Dilli wala.
Thank you so much. And over to you, Sonal.
Thank you, Mr. Shah, for this fantastic discussion. Request you to please just stay back for a moment. I would like to call Dr. Jyoti Nair, HOD Finance, NL Dalmia Institute of Management Studies and Research, to please come on stage and hand over the token of appreciation to Mr. Shah. I know everyone is very interested to meet Mr. Shah. Can I request you all to please take the conversations outside? We need to start with the next session. So building on to the sentiment, mutual fund sahi hai. The next panel discussion, asset management and investment paradigm, will discuss just that. Please join me in welcoming the session speakers, Mr. R. Srinivasan, CIO, SBI Mutual Fund, Mr. Rajiv Thakkar, CIO and Director, PPFAS Asset Management, Mr. Swaroop Mohanty, CEO of Mirai Asset Mutual Fund, and Mr. Sunil Subramaniam, MD, Sundaram Mutual Fund. Moderating this conversation will be Anilesh Mahajan, Deputy Editor at India Today. Welcome, everyone.
So this is one of the very interesting sessions which we would be having in the morning. The asset management companies and many of us know that in last 10 years, from the 10 lakh crore assets, now these companies are handling roughly around 55 lakh crore worth assets now. And many of the gentlemen sitting here are the champions and representing the champion companies who have made it. Especially when the foreign players, they went out because they couldn't invest into the distribution networks, and which they have painfully, created in the country, and now they are leveraging many of those benefits. So when Prime Minister is talking about, see, I am a Delhi wala, so there is always a political tadka to my conversations. When Prime Minister is talking about his third tenure, and he is talking about Abki Baar, 400 Par, there are a lot of euphoria in the markets, not only in the stock markets but also amongst the investors. I want to understand from all four of you that what sort of sentiments do you see in the markets? What sort of preparations the players are doing, especially when Prime Minister is talking that now many of the bold steps will be taken to push the markets as well as the investments. And he has already given a brief roadmap that in next 10 years there will be a $10 trillion economy, and in next 25 years he wants to make a $35 trillion economy. And that will not be possible before, without the mutual funds and asset management companies. They are upping the game. So maybe, Srinivasanji, you can start and help us in understand that, what sort of things you foresee. And if you can help us in understanding that with the, especially, State Bank of India has a deep distribution network. How do you think that that network can help in accelerating the growth?
The growth of the asset management industry is what you're
Industry asking? As well as, eventually to the country. No?
So we are growing at a hectic pace. And right now we have a problem of more money coming in and not enough stocks to buy, which is pumping up valuations. Yeah. I'm saying we are growing at a hectic pace already. We're getting a lot of flows. And right now we have a problem of too much money coming in, chasing too few ideas out there, which is pumping up valuations. Right now it looks like this growth will continue because when the investor looks at the rear view mirror, he's clearly making a lot of money. So I don't think we need to do anything extra. We're getting more than what we're asking for from an asset management company.
But do you think that there has to be more portfolio expansion, more more type of assets need to come into the fold? Because still there are very limited exposure is there. So do you think that more diversification is required?
In terms of asset classes, you mean?
Classes.
So we have set up an alternates division. So we do long short funds. At some point we will get into private equity, though it's a different ball game altogether. I think that is happening. But right now the flow is into public markets, which is the mutual fund where you have a tax benefit. So it's clearly a lot more attractive.
Thakur Saab, if I can come to you, you help us in understanding, since, see, SBI is a big player, but how do you see, this expansion happening? You are part of the growth story of the country. So help us in understanding that.
Sure. So, in the previous sessions, we spoke about the Giant Trinity, Jan Dhan Aadhaar Mobile, and the first thing is obviously a bank account where it's the first step of financial inclusion. I think the second step is happening as we speak, where accounts are being opened for mutual funds as well as for insurance companies. So after JAM, probably there is D, which is a DMAT account, and you spoke about distribution and how that has been a challenge. So that obviously on-ground distribution helps a lot, but what we have seen is some of the newer players are able to leverage the technology infrastructure and really bring a lot of players into the fold. So people like Zerodha, people like Grow, Kuvera, Paytm Money, T-Money, lots of players have come in, and really this number of unique investors in the industry, which has gone to 4.5 crores, I think that rise has been driven by a lot of these online discount brokers who have brought more investors to the fold. Completely take the point that Srini spoke about, that probably flows are running a bit ahead of the fundraising. So given that a lot of capital expenditure is needed to grow the country, maybe a lot of fundraising will be required to keep the valuations in balance going forward.
Montiji, this $10 trillion, dream is very big. So what sort of preparation do you think that your industry need to make, because many of the things, see, $10 trillion also means that country needs to grow at 12% CAGR. So that will also happen only if, markets also complement, plus, the growth also comes from the, bottom of the pyramid. So what sort of preparation do you think your industry needs to make that thing happen?
See, from our perspective, in this industry, there are two players. The fund managers, you see two incredible ones to my right, and the investor. These are the two relevant people in our industry. The job of all of us is to communicate transparently and truthfully between the two. That is the fiduciary nature of this business. When you talked about, Rajiv talked about 4.5 crore investors, let me remind you, before COVID, it was just 2.3. That would mean some 20-25 years of mutual fund industry resulted in 2.3 crore portfolios. Post-COVID, just four years, we added 2 crore more, or maybe more than that. So the financial assetization of assets is happening. Now, whether 10 trillion will happen on a certain date or a little later is a reality. It will happen someday or the other. But what's happening at the underlying is India definitely has long-term investors making very short-term investments. Last year, the equity AUM grew by around 8 lakh crores. And you said 10 years ago, it was just 10 lakh crore industry. Out of that 8 lakh crores, just 1.6 lakh crores is net sales. The rest is what the fund managers have got to the table. That's something which we have to think, whether investors are actually marrying their investment journey to the 10 trillion journey. They, like Shini rightly said, are completely rare view investors. I mean, and when you're looking at 40% of flows going to small caps, it is brash return chasing. So there a lot of work has to be done as to how personal finance has to grow, and there you all play a big role in communicating to the investor of shifting to a far more longer term approach. And hence, see, the market got 1,60,000 crores from us, market has run up. But the investor has been switching from one fund house to the other, probably one scheme to the other, and that big gap of investment return or investor return. That's the bigger challenge. From our side, there are just two infrastructures that is needed. Like Srini rightly said, and Rajiv kind of echoed, there is more money coming in than we can manage. At Mirai said, we've been infamous for stopping flows many a times, and we continue to do that because you have to take in money which you can manage. So that's the main focus, to increase the infrastructure of the fund management team. That's point number one. If you don't have the infrastructure to manage the money, you should not be taking money. Second is to increase the infrastructure of servicing these clients. And then that a lot of tech play will happen. If these two simultaneously start growing up to encompass the money that is coming on, we can manage any other flow. Otherwise, it will lead to some other places.
So when you say that, the inflow is more and outflow is less, so is it more structural issue, or do you think that, the enough asset classes are not there where investments can happen?
So irrespective of what the money will come in, bulk of the money will remain in the core places. Bulk of the money will remain in the core form of your, pool, which is large companies, solid companies. Invariably, that is where the big plays will happen. Now, whether this play will be active or passive, time will tell. I don't think adding any asset class will create anything further. There are enough stories and more in the market. Now, after the last 10, 15 years, one is wondering whether equity is a better performer than gold based today. So all those things have to be realized at an investor level through a substantial personal finance knowledge, either through you or our large distribution base. And that's where the story has to unfold. I don't think adding any new asset class will result in... All those ideas are already there. And there are more than those ideas which are not attracting any money. Bulk of the money remains in the core, boring, solid ideas.
Mr. Sunil, what is your view? This is a very peculiar situation that inflow is much more and outflow is limited. This requires a lot of innovation, So how do you, see this scenario?
So first of all, your statement that inflows are more than outflows, you need to moderate it with taking SIP out of the picture. Today, SIPs have touched almost 20,000 crores. You take away the SIP flows, the outflows are more than the inflows. On lump sums, right, people are booking profits and taking out money. It's SIP flow which has sustained the industry, right? And that, I would say, is the best thing to have happened, right? Because when customers are buying through regular systematic way, right, the volatility in the market becomes an aid to them rather than a panic to them, right? Rupee cost averaging comes to. So as the new investors who come in, we've had almost doubled the number of new investors. As they come in through the SIP route, right, they then don't panic. Whereas if we saw what happened in 2006 and 7, there was the same rapid rise in the stock markets. In 6 months, from 2007 July to December, markets went from 14,000 to 21,000 Sensex. When the GFC happened, for the next 2 years, 3 years, industry struggled to get people to come back into it. Because that time it was a NFO-driven, lump sum-driven. What's different now is that the entire distribution committee, MFDs and the banks, have been making people to come in systematically. And that's where I would say is the best thing to happen, right? Because if this sustains the flow, and we can dream of a day when your SIP book can be 100,000 crores a month from 20,000 crores, 3 years, 4 years down the line, that will be the real sustainable one. Second is the money which is still coming in, right? If you see mutual fund as a proportion of bank deposits was in 2010 about 14%, today it's 27%. So there is money, it is being diverted from the banking system to this. But in my view, that's still a lot of greed money. It is not retirement planning money. It is not the fundamental reason to eat equity is that that's the only way to beat inflation. And I think we have a long way to go to educate people, because when there's a correction in the market, right, how will people behave? The same people today. So just go back to December 22. All of us experts sitting here, go back into your own media, take any media house, say, what was the expectation for the year 2023? They all said fixed income is the best. 8% return is reasonably assured in fixed income. Equities may or may not give. End of the year, what happened? Large caps delivered 24%, mid caps delivered 60%, small caps delivered almost 70%. So reading that market view, and this flows, right, happened only after those returns became apparent. So more than 50% of the SIP book is coming into small and mid caps, right? Now, the key point from my view of the industry is that we need to sell large caps to investors as less volatile products with the intention of building a retirement corpus. Fundamentally, the simplification of the product. Because today, this whole looking at the past returns and putting more money, it's an easy sell to a customer to go and show the small cap returns and get him to put. The industry is doing good by not taking it in lump sum and putting it into SIPs. Distributors, I think, have done a fantastic job there. But even there's a risk that See, you talked about the Delhi and you will talk politics, right? Take one thing, right? 70,000 crores of money came in from FIIs in the month of December, right? After December 3rd. The 3 months prior to that, FIIs were net sellers in India. What happened on December 3rd was the assembly election results gave them a confidence about this government returning to power, right? Now, is it all 70,000 crores come for 10-year money? There are hedge funds who will put money for 6 months. Mr. Narendra Modi comes back to power, he will book his profits. Be prepared for volatility. Don't think that all this money is lasting there forever. So, in a volatile situation, right, they may sell large caps, but fund managers, when they see large caps correcting, will divert their flexi cap money from small cap to large cap. And that could lead to correction in small cap. How is the investor going to behave there? How is the distributor going to handle that investor? These are the larger issues that we need to make sure. And I think that sensibly marketing retirement planning products, children's education products, making sure those asset allocations are largely in the large cap space, getting a less volatile, decent inflation beating, FD beating on a post-tax return is what we as an industry need to move the country's population. Because 4.5 crore in a 140 crore population. So the glass is not even 10% full. So I think the right selling, according to me, I hate to say the word mis-selling, but just pushing products based on customers are buying products on past returns. Industry is happy to sell based on past returns. All that money is coming. You take your BSE or NSE 500 index. 500 stocks, 74% of the index is in large caps. That means 100 stocks account for 74% of the market cap. 400 stocks account for only 25% of the market cap. So even a small amount of liquidity through these SIPs coming into the small cap and mid cap, plus of course your PMSs and your retail buying macro caps, as Mr. Nilesh said, that's pushed up that. That's all, except for the SIP book, the rest of could be hot money. So I think that we need to make sure for the growth, sustainable growth of our industry, right, that we sell a broad-based range of products with an adequate tilt towards large cap oriented products so that the volatility is less, and even large caps will comfortably beat inflation, and as long as the current tax regime of 10% continues, they will get double the fixed deposit returns. So I think long-term sustainable growth has to be on the right selling and the right pitching of the product to the investors, especially the new ones who are coming in. The balance 136 crores who have yet to come and taste the capital markets.
Srini, he has dealt with the froth issue to some bit, but I want to prick your mind, when we read 75,000, the benchmark number at Sensex, there are certain discounts which we see that, many of the analysts are flagging also, that Fed rate cut, they are discounting it. Then political stability, they are discounting. Then they are discounting that oil prices will stay stable or lesser than $90 at present. Do you think that the Indian markets are mature enough, or they have attained that level that once the burnout comes, they'll be able to sustain it and continue with the growth story? Or do you think that certain things need to be corrected before that burnout comes? What is your view?
No, it's not a question of maturity. Markets are cyclical. So if expectations, if actuals are lower than expectations, then the markets will fall. So you will see that cyclicality. It's not a question of maturity. US market is mature, but US market falls. Unless you're talking of whether the market will factor in long-term growth, I'm sure it will factor in long-term growth.
But sir, but the thing is that how much...
So Modi doesn't come in with the market fall. Yes, it will. That's very obvious. If Modi doesn't come in for a third term, will the markets fall? It will. It's not a question of maturity. It's a question of what the market is expecting and what will eventually happen.
But the thing is that even if Modi comes, the market is bound to do corrections, because I believe that hedging is happening.
Markets do not move on events. Market moves based on expectations of those events. So whatever events are factored in, you will not get that price appreciation. The real question is, you don't know what is factored in. How do you figure out what is the expectation in the market? You can ask me, Rajiv, a couple of others, and they'll tell you something, but we are not the market.
So, Thakurji, if I can come to you, if you can help us in understanding that this froth thing, how much do you think is froth and how much do you think is the real beer in this glass?
So the question of what investors will do, or are they mature enough, jumping into that question. See, we haven't seen a sustained downturn or low level for, I would think, quite a while now. We had a period from 1992 to 2003 where markets went nowhere and gave negative returns. Post 2003, buy the dip has worked each and every time. Any 10-20% correction, you jumped in and you made money within 3 years. How will investors behave in a sustained downturn is guesswork. I don't think anyone has an answer. People get excited about EPFO money. I'm sure if EPFO makes negative returns on equities for 5 years, there will be questions in the parliament, what business do we have putting retirement money into equities? So that is a fundamental question which no one has answer to. How much is froth? How much is reality? I think that question is somewhat tricky because barring 92, every subsequent bull market, there have been pockets of exuberance and pockets of reasonable valuations or undervaluation. Late 90s, new economy was frothy, old economy was cheap. 2007, real estate, infra, commodities were frothy. IT services, FMCG, pharma were reasonably fine. 2017, froth in small and mid caps, others were cheap. So it's a complicated question. We largely, as active managers, have to figure out 20, 25, 30 companies where we find opportunity and invest in those. Broadly, I would agree with what Mr. Nilesha said in the previous session. Large caps are more or less okay. The smaller the market cap and the less liquid the company, the more the chances of it being frothy in the current market.
Thakurji, what is your view? Or Monteji, what is your view into this conversation?
See, I think a lot of wealth is not created in 3 discussions. First is market all-time high. Second is when is the next correction. Third, now the new term is froth. The reason people come to mutual funds is they will take care of these 3. You do your asset allocation. What is happening is nothing, not that anybody is not aware of what it is. If you are going to put 40% of your money in smaller companies, there are genuine issues. There is nothing wrong with those companies. The issue is when you put 40% of the money. Right? That's the bigger issue. And that's where the discussion has to revolve around. Discussions have to revolve around what is the right asset allocation rather than whether market is an all-time high. It has been all-time high for all my career. I got married in 96, gold was 5,400. Right? It continued to grow. I got married at a time when markets were all-time low. So, does the NAV stop after you redeem? It does not. Right? Will India stop growing? Will it stop growing? It won't. Now, it depends on how you view. Whether you view the Sensex at 74,000 or you look at India at 7.4 trillion will define how you behave. That is where the discussion should. I don't know whether there is froth in the market, clearly. No, if somebody knew, they wouldn't be salaried employees, is a reality. Right? So, if the story is intact, then all you do is take the ride with the story. Now, if you want to time the story, then the discussions of froth will come in.
And do you also think that it is the right time to increase the float for many of the companies? The capital floats, is it the right time for them also? And especially, when we see that, PSUs, this government is talking about taking the market routes. And this is the right time to basically, increase their or decrease the government equities into those companies. Is this the right time?
This froth is being discussed because of ownership of free float, right? Yeah. And increase of free float will always be welcomed by all of us. The risk is how much free float you own, right? At our end, we don't cross 3 to 4% of free float, never. irrespective of what is our valuation of that company or what we feel of that company. We are cognizant of that always. So we will always, and that's the job of the regulator to kind of see to it that float always increases, liquidity increases. It's a market factor. But if you see systematically, it's been growing over the period of time, even from the lower companies.
Sunilji, what is your view? Is it a good time for companies at least to look at the options of increasing the capital float? Take the market money in, especially the way the markets are behaving right now?
See, the first thing is, I want to say is that this word froth, right? It's inevitable that the markets, right, go through cycles. It's like the industry has to go through cycles because capacity addition can happen only in bulk, whereas consumption happens linearly. So inevitably there will be capacity excess, capacity shortfall. So like that, the markets, because they are not driven by the linear nominal GDP growth, but by liquidity flows coming in and out, there will always be periods of excessive valuations followed by periods of correction, right? So these periods of froth is the bad word, right? Everybody is trying to say, is there froth, and scare investors away or come in the public domain, right? Now, like Swaroop said correctly, the fund manager's job to figure out is that froth is coming because of there's a future discounting happening, because the markets entirely deal in the future. Is that a verifiable one? Is there a downside risk, a margin of safety? That's their job. But if froth were not there, this industry's penetration would not have happened. Lassi, bina froth ke piyoge kya? See, why I'm saying this, the capital markets go through this word irrational exuberance. I'm surprised you haven't brought it up. That's this famous word. What happened after he said irrational? Markets went up even more. So the point is that there are experts sitting there who managed people's money, right? Now the point is for people, if they're coming in seeing a 68% return last 1 year in small cap and expecting that next year will be 68%. That's the challenge. Why are you in the equity markets? You want to beat inflation, beat FD returns. So if you make 20% next year in small caps, you shouldn't turn out and say, "Arey yaar, khali 20% hi bane." Right? So that's why I'm saying, see, the froth, however, plays an important role. This penetration would not have happened if those exciting returns were not there in the hands of mutual fund distributors to go and talk to the customers, see the potential. So let's not discount this froth because it's an inevitable part of the market cycle. In the good cycle, how well we capture it and how well we do right selling. Don't just use the past returns and say future mein hi hoga, but use that to say this is a good investment prospect. So that's one. So from that point of view, then coming to your question, which is about one of the reasons why there is froth in pockets is because the promoters are holding too much of the equity with themselves, right? Now, why are they not listing it more? Why are they not diluting it? Because they don't see a use for the money. Our fundamental problem today is that our capacity utilization, after recovering from COVID's 60% to 75%, has got stuck there. The infra cycle is being driven by government spending on roads and infrastructure, by FDI coming into PLI schemes and some factories and others being created. But domestic private sector is not building fresh capacity. So as the consumption story moves based on the per capita GDP growth, I believe that promoters will use the capital markets to raise money to finance their capex program. So it will happen that this froth will get diluted by the increase of the free float. So it's a part of our life. So we just have to smartly manage the money, and that's the job of the AMC industry, to manage, not to say no to the customer. My worry about this fraud thing is that you're trying to scare away customers. No. Take it in the right way. If your small cap fund you feel you can't deploy, you put a pause. But take the money in your large cap. So we have to take the money in the right way, sell the funds in the right way as long-term inflation beaters, and then deploy it in the right way, right? So this is the mix. For example, in a small cap fund, you can put 35% in large caps. Right? SEBI allows you that. So can you handle that money by putting it more into large caps where all of us agree that it's not as frothy or obviously as the mid and small cap. So that's the job with the experts. Leave it to them. But I don't want this fraud to lead to investors shying away from the markets. Markets will over the long term, and Swaroop's point about lifetime high. Every lifetime high investment after 5 years has delivered inflation beating returns. Take it from me. The lifetime high should never be a reason for you not to invest in the market. Keep your horizon to that period of 5 years, 7 years, linked to your goals. So I think goal-based asset allocation, these are far more important questions for us to deal with people than about this.
Thank you, Sunilji. You know, I have been telling everybody that I am greedy. So because of my greed, we have, exceeded the time. But I'm really thankful that all four of you have increased my knowledge base. And I'm sure the same feeling will be there in the audience. I thank you really from my bottom of the heart. And I'm really sorry that because, the time is up and we are running behind little schedule, I will not be able to, take the questions from the audience. Maybe the gentlemen are around, so maybe later on you can have those questions. Sonal.
Thank you, everyone. It was certainly a very insightful panel. I extend an invitation to Professor Tapas Mitra, Professor of Finance at NL Dalmia Institute of Management Studies and Research, to please come up on stage and offer the token of appreciation to our guests. We have discussed about stock markets, mutual funds, the banking system. Now we'll discuss investing in land and real estate that remains one of the most traditional methods of investment. The purchase of physical land has never gone out of trend. However, it also comes with its own risks and considerations. The next session is a fireside chat on real estate as an investment avenue with none other than Abhinandan Lodha, Chairman, House of Abhinandan Lodha. Welcome, Mr. Lodha. And facilitating is this session will be MG Arun, Managing Editor at India Today. Requesting you both to please come on stage.
I know it has been a bit hectic for all of us, but I'm sure the next session is going to be really, really interesting because we are going to talk about something that is slightly offbeat, and especially when it comes to plotted development, which is an area which is really catching up. We all know that India is a much sought after investment for real estate in Asia Pacific. We have attracted over 23 billion in investments since 2018. And the institutional real estate investment in India increased by 27% year on year during the first 9-month period, with an increase in both industrial and residential deals. So we know that there are various ways in which we can invest in real estate through the real estate investment trust, fractional ownership platforms, real estate mutual funds, or investing in land parcels. And today we have someone who can best explain to us the intricacies of investing in real estate, and is none other than Mr. Abhinandan Lodha. He's chairman of the House of Abhinandan Lodha. He has been in the real estate business for over the past 20 years, I suppose. And incidentally, his firm is also betting big on the infrastructure development in Ayodhya, and has been in the news for that too very recently. I think, Mr. Lodha, we'll start with something on a broad scale, on a broad brush, as to the potential of the Indian real estate sector. We know that the real estate sector has gone through its own ups and downs. You know, it has been, at one time, it has been a haven for all kinds of fraudulent investments and black money and all sorts of things. We have seen how RERA has come in and changed that to a large extent. What is the current position, and what is it, looking at from an investor point of view, what is the kind of potential you see in real estate?
Afternoon. Thank you for having me. So the Indian real estate sector is an extremely interesting analogy to the way the economy functions. And most reports will tell you that 70 to 80% of the wealth of most Indian households is invested in the real estate asset class. Having said that, I think the opportunity of real estate investment has never been as interesting as it is today. So, you have asset classes for every kind of investor in real estate today. You have the new asset classes like the REITs, which allow you to run the fixed income instrument parallel through buying REIT shares, and you also have the economic upside of that. We've also been seeing what has been a large change in the way real estate consumption is taking place in urban areas, and that's reflected in the way you see volume changes and value changes in most urban cities in India at this point of time. Mumbai, Bangalore, Hyderabad, Delhi have all doubled or tripled their volume sales over the last 2 or 3 years. But I think the most interesting part is that India itself is changing extremely fast. And if you go back historically in time, I think the best return assets in real estate in India have long been the ability to own land. And if you've had the ability to own land in the right place at the right point of time and hold on to it for a large amount of time, 10 to 20 years, then the kind of compounding return which it allows you to get is extremely difficult to match anywhere else. So the new developing India, the cities which are probably what I would say tier 1 minus today, the Lucknows and the Ahmedabad and the Surats and the Barodas of the world, where there is large scale infrastructure development happening, large scale job creation happening, and the state and the central government are coming together to create infrastructure havens. So if you take the example of the Mumbai-Goa drive today, it's a 10-hour drive if you want to go from Mumbai to Goa. But with the new Mumbai-Goa highway getting inaugurated in December 2024, the drive will come down to 4.5 hours. And the moment these kind of infrastructure changes happen in any location, then the amount of real estate return which it generates is paranormal and disproportionate. So I think real estate as an investment class is extremely attractive today. It has got multiple avenues. It's got real estate investment trust. It's got the ability to invest in land. It's got the ability to own fixed income assets. But most importantly, in my knowledge, the ability to participate in growing India is where the maximum amount of returns will be made for investors.
Now that you have highlighted, the overall potential of real estate segment, as far as plotted development is concerned, I think you are one of the largest holders of, such kinds of land parcels. you have had experiences across the country. You have done some very unique kind of investments in Ayodhya, which you could also highlight and tell us your experience. So we would like to know more about the potential of plotted developments, the returns, for instance, the size of the ticket sizes, etc.
So I think plotted development or ownership of land goes back to the very base feeling in almost every Indian. I think that whole concept of zamindar and zamindari and the desire to own land has to be extremely important part of our psyche as we build up. I think the investment in stock market and all other asset class has an acquired taste, but the investment in land and gold is an inherent taste in almost all Indians. The problem for a very, very long point of time in India was land gives compounding returns over a period of time. You should not be buying land if you've got money for 1 or 2 years. And if you're buying long-term in land, 10 years, 15 years, 20 years, then you've got a few problems. The problems start from the ability to own the land for a long period of time in terms of keeping the title clean, ensuring that there are no encroachments which happen, ensuring that all approvals are taken and kept clean, and ensuring that if at times you require liquidity, then that liquidity is available by selling in the vicinity. If you take all of these 4 problems, I think these 4 problems are what was coming together to prevent a lot of Indians from buying retail land as an investment class, and it was only being bought for consumption. I am from Ahmedabad. I want to build a house for myself. I'll go and buy a piece of land close to the peripheries of Ahmedabad because I can go and see it almost every week, and I'm going to consume it in the next 12, 24, 36 months. What we've now seen, and I'll give an example of what we are doing at the House of Abhinandan Lodha, is we believe the future is actually in dematted land. It's in the ability to sit in any part of the world, talk to an expert across the screen whose brand you can trust, and understand from him where your investment avenue and the government's infrastructure is actually coming together. There is short-term, mid-term, long-term creation of wealth happening in land. So if somebody had the ability to have the foresight to have bought in Ayodhya in 2022, then the kind of return he would see in a 4-year period would be quite phenomenal. But if somebody would have the potential to go and buy land in Konkan today, then the kind of return you would see over a 10-year period is quite large. Now, what we've managed to do is we've essentially said over the last 2.5 years, we've done an understanding of the entire country. We've identified 48 locations across the country which we believe are great for owning land, for wealth creation. And we believe that should be the primary reason to own land. You need to own land if you want to compound your wealth and make it intergenerational. It's the best asset class to own for that. And if you're able to make the transaction frictionless. So for example, at the House of Abhinandan Lodha, we never have a physical interaction with any of our consumers, ever. Over the last 2.5 years, we sold close to 3,000 crores worth of land to 6,000 consumers, and we met 78,000 consumers all across the screen. Nobody's ever visited our office. Nobody's ever visited our site. And most people can actually come on our app, download the app, have a sales call, understand why we are sort of looking at the location as a great mid-term, short-term, long-term play, buy, build, lease, design, resale. Everything across the app, which largely now means that I can be sitting in Chicago, have the desire to own a $100,000 investment back home in India. I can pick Uttar Pradesh as my home state because I believe there is great infrastructure work happening there. Then I can go to Ayodhya, select a piece of land sitting in Chicago, do the transaction completely online, and eventually after 5 years exit without ever actually having to go to that land. The use of technology in real estate as an asset class is going to fundamentally change the way people are able to participate in it. It is going to change the kind of returns it is generating, and it is going to ensure it comes at the forefront as an alternative investment class which you need to be a part of if you want to create compounding returns over a 5-year period or above.
Well, that's wonderful. I mean, I think, in fact, in the entire session today, we were talking about digitization and how things have gone to the next level. And when customers make such big investments without even meeting, the company, the firm, then that speaks volumes to the way in which things can happen. So how does the interface look like? I mean, one can actually view the properties, and what about the other land, I mean, the documents and other stuff?
So I'll give this as part of an analogy. So this is, Mr. Amitabh Bachchan has bought a piece of land from us at Ayodhya. This is, I think, bought in January 2024, this year. This was right before the mandir got inaugurated. And we've had the honor of knowing him for a prolonged period of time. So he called up one of the people in our organization and he said, I want to buy the land in Ayodhya. Do I need to go there? Because that's a problem for me. So we said, no, even if you want to go there, you can't go there. You will log on to our app. Once you log on to the app, you will have somebody will fix a call for a video conference with you. Once you come on the video conference, you can see everything across the screen. Which piece of land you specifically want to buy, what is around it, who are the people who are buying around you, what is the view going to look like, how many minutes you need to take to walk to the clubhouse, how many minutes you need to take to get to the station, how much time does it take to go from the entrance of the development to whatever the main nodal points inside the city, and what the development will look like when it's ready 1, 2, 3, 4, 5 years from now. Post that, you can click on the app again. You can download all the documents. Your title plan, your approval plan, the standard registration agreement, the deed of conveyance, the local authorities plan. You can look at the registered agreements of every single buyer who has bought around you to understand how the land prices have changed over the last 3, 6, 9, 12, 18, 20, any cut of time which you need to take since the project started. And once you are done all of that, you can then choose to buy. And once you bought, you can again, at the end of the delivery period, come back and say, now I want to build a house which looks exactly like this. I want this to be designed like this. I want this to be leased out. And for all of this, you never need to come and meet anybody in person. Everything is across the screen. And that, Arun, is the only way to really create any large traction or volume in this segment. Otherwise, people have gotten so scarred by investing in land and getting stuck there that they will only invest it only for consumption. But the real value of land is intergenerational compounding. You own land in Thane in 2003. The rate was 1.5 crore rupees per acre. The same land in Thane today is worth 180 crore rupees per acre. That kind of return is not possible in my knowledge. 22-23% compounding return over a 10 to 20 year period across any geography in India. You can take Sona Road in Delhi, you can take Jubilee Hills, you can take Gachibowli in Hyderabad, you can take any location across the country where development has happened, where you participated with clean title land. The return which you will see will be 20 to 25% compounding return on a period of 10 to 20 years.
That's interesting, but I think there is probably this question in a lot of people's minds regarding how clean the titles would be, because I think that's an issue. That's a issue that even companies such as yours will have to surmount when you actually buy this. So how is one reassured, that the titles are cleared and in future they wouldn't be a hassle? So how do you work around that?
So I think there is a answer for the industry as a whole, and there's an answer specifically for what we do. For the industry as a whole, I think RERA has taken a very large role in ensuring people can only launch once the title is clean. And I think that allows people to ensure that they are buying into what is headache-free land. For us in specification, we actually not only ensure the title is clean, we ensure every single owner of land, even if you're holding 1,000 square feet, you get a 712 extract transferred in your name for your piece of land with all approvals obtained onto it. What typically happens in plotted developments at point of time is that you may buy clean title. How do you ensure you get clean title transferred onto you and there's no future issues which come out of being part of a larger society? So I think the insistence on getting specific 712 extracts in the name of each buyer is an integral part of how the plotted development industry is going to change in this country.
This is also one area where you have seen the CAGR at upwards of 30%. So when an investor is investing in something like yours, I mean, generally in the plotted development space, what's the kind of returns that he can look at? And number two is, what's the kind of ticket size? Like, I mean, there would be so many small investors who would like to come in into this. I mean, not everybody need not be an Amitabh Bachchan for that matter. So how do somebody who's a salaried person look at it? Where can he begin, this?
So, great question. I think the returns have been quite paranormal over the last 2.5 years. On an average, most locations have delivered a 30% CAGR for the last 3 years. So we are present in 10 locations across the country at this point of time. We've not seen returns below 30% compounding anywhere. I don't think that's the right way or the right guidance for the future. If you're buying land, it should be with money which is 5 years to 10 years or above. In that period, historic data, it's not my data, it's data easily available across the country, tells you 20 to 25% compounding return on clean title land in any urban to semi-urban area has been the norm in this country since 1947. So I would say if you got 5 to 10 year plus money, 20 to 25% return over that period of time compounding is what you should be expecting coming from here. In terms of the ticket size, the smallest ticket size you can participate in starts at 15 lakhs. The largest goes to 10 crores. So almost every category of investor can participate. In fact, we've seen people who are extremely well-to-do, starting with a small ticket size, liking the experience, then coming back to buy second and the third time. At this point, around 27% of the people who buy from us actually are people buying with us for the second or the third time.
For the second or the third time? Yes. That's interesting. So, so what are the prerequisites to get into for an investor? Just as the investor would look at a trusted brand. I mean, that is, of course, there. And I think brands such as yours also have this kind of a benefit that, over a period of time, it's a time-trusted brand. So how important is the brand in this? And also, how do you look at the customer? I mean, I remember there are several development, and this I'm talking about properties, where a customer is sent away, because we won't give you this property, because the moment they come to know maybe you are from a particular profession or a particular salaried bracket, then, it is out of bounds. So how do you look at the customer also?
I think eventually the brand is the most important asset which we own, because what we are specifically doing with our online frictionless model is we are telling people you need to trust what you're seeing across the screen and participate in that. And that's the only way for you to participate in the growing India story. Otherwise, you cannot participate sitting in Mumbai, you cannot participate in Vrindavan if you need to fly down every time to go and see what you're actually buying. And I think a large amount of the trust people have actually comes from the fact that the brand has successfully delivered over the last 2-3 years, and people have seen the kind of growth which we've created. In terms of how we look at the consumer, I think anybody who buys our way of doing business is welcome to participate, which largely means it has to be somebody who's quite tech savvy, quite brand conscious, because we are at a 2 to 3 times premium to the market wherever we are present. So somebody who's brand tech savvy, brand conscious, has a long-term affinity to hold and compound wealth, and is understanding of the way India's demographics is changing. In normal case, these turned out to be well-educated people who understand trends in India before most other people, and they are present across all cities. It's not that we are having participation only from a Mumbai or a Hyderabad or anywhere. We are having as much participation from a Kakinada or a Chicago as we are having from a Dubai or a Mumbai. I think people are quite financially savvy. Any financially savvy person willing to participate in New Age India is essentially our consumer, and that's the way we look at it. We also have a very detailed approach to understanding how our consumers look. So we have a very detailed approach on the demographics, on understanding their financials, on understanding their need for participation, because we are almost like wealth advisors. So we should be able to go and tell, Arun, it'll be better for you to participate in a 7-year story, which is going to play out better in Neral, as compared to a 15-year story, which is going to play out in Vrindavan, because you are actually buying this for the education of your son, which is going to get you in 7 years from now. And that's the kind of conversations which our people are able to have with our customers. So we play the role of effectively being technologically savvy wealth managers in the oldest asset class in this country, which is land.
Just in the previous session, we had Mr. Nilesh Shah, who also cautioned us he mentioned Mr. Bradman. While he's a record holder in many ways, he has also had some ducks, in his cricketing career. So what are the kind of cautionary things that, investor in real estate should be looking at?
I think the most important thing is participate with names who have a track record for delivery. Don't try to go for a short-term return on investment. Real estate is really not the right asset class for it. And be very, very certain and sure that what you're bringing is as far as possible unlevered long-term money rather than levered short-term money. I think if you're able to do that, the India story is so strong. Wherever you participate, you'll do extremely well in real estate in India.
And what do you think finally are the hottest locations to buy land? I mean, after listening to you, I think a lot of us are rushing to do this. So some of the, not just yours, which is presently, but even future.
So I would think the states of Uttar Pradesh, Rajasthan and Madhya Pradesh, these three states from a demographic, wealth creation and infrastructure development perspective, you buy anything in these three states, it should do extremely well along with Maharashtra.
That's wonderful. I think it should be a helpful tip. So thank you so much, Mr. Lodha. Big round of applause
Thank you,
to
Arun.
Abhinandan Lodha, Chairman, House of Abhinandan Lodha.
Aren't we all rethinking our now personal investment strategies? Thank you, Mr. Lodha, for your time. And I would like to call Ranjit Sahaya, Managing Editor, India Today, to present the token of appreciation to our esteemed guest. If you're interested in land, please can we have a round of applause for him? It's now time for the concluding session of the day. Despite the fact that we are one of the fastest growing economies, insurance penetration in the country is still below average. We'll just wait for a few moments before the stage gets set, and I'll then call the speakers on stage. To discuss the new insurance tools in financial planning, I now invite on stage our session speakers. Please join me in welcoming Mr. Vineet Arora, COO, HDFC Life Insurance, and KV Deepu, Senior President and Head Operations and Customer Service at Bajaj Allianz General Insurance. India Today's Deputy Editor, Anilesh Mahajan, will take forward the final session of the day. Welcome, everyone.
So I can understand, this session is between the knowledge and food. So we are beginning with the food for thoughts. And what better than the insurance sector and understanding the best tools available right now. Well, gentlemen, I have already told the audience that I am greedy. Since you gentlemen are around, so we want to understand, the sector's projections. Especially when, country already has 48 crore odd the Jan Dhan accounts, and with this, the penetration of bank accounts has almost universalized, and every Indian citizen is now connected to a bank account. And next obvious step is to sell him the financial products. And what better than the insurance, life insurance, as well as ensuring the incomes through the products like health insurance and other things. help us in understanding that, when can we expect the universal coverage of, I can start with you, Vineet, since you deal with the life insurance. When can we expect that every citizen of this country, especially who is earning, he will get the access to the insurance product? Right now, I think the coverage is roughly around 25 crore odd. When can we expect this to happen? And when can we see, the problem which we see in India is that one, the insurance products are very complex to understand, especially from the consumer point of view. Secondly, they are not sold or probably not understood as investment opportunities. How we can, break those barriers, especially, when the bottom of the pyramid, which is just getting access to the banks, and they have a different mindset altogether. So how we can mitigate, those type of risks? Please, Vineet, mic is yours.
Thank you. Thank you, and thank you for having me here. I think extremely pertinent question on how do we really ensure every citizen of India with a cover. And why is it important to do so is, I think all of us understand that, but maybe just to explain, because protection either in terms of life insurance or in terms of health insurance is something which is really, really mandatory, because if any kind of stress happens on an individual's life, it affects the whole family, right? So it could, a morbidity could affect the whole family, or a mortality could affect the whole family. And that's why it's important that to avoid this financial stress, you need to have an insurance and a protection cover for every citizen in India. I think from a number perspective, there are 2-3 ways that insurance penetration is today looked at. One is as a percentage, premium as a percentage of GDP, then there is a protection gap. So what we don't really look at, and I think you mentioned that number, like a 25 odd CR might be the right number, or maybe close to that, is how many lives have been touched. Like, for example, when you're talking about the Jan Dhan, you're talking about number of accounts opened, right? And so similarly, we should also track how many lives of the working population actually are touched or who have bought an insurance. What my hypothesis is that the penetration in terms of reach, I think, is reasonably there. We can do much better as an industry. I think where we don't really have made a full mark is in terms of amount of sum assured or amount of insurance that an individual buys. So you might buy a small product, maybe for the ease of the process, maybe for the liquidity available with the customer, or for whatever reason, but it is not adequate enough to cover. So that leaves still the entire protection gap and does not solve the real purpose why insurance was designed and what's to be bought, right? To reduce that entire stress. So that's, I think, one side of the story. Second is that within insurance also we have multiple products. So insurance, just by a common thing, we assume it to be only savings, etc., etc. But now, as the last 20 odd years of 25 years of privatization of insurance, and many new products have got launched, new distribution channels have got evolved. Products right now, starting from a simple term product to focusing a lot more on retirement, annuity, etc., has fully got more and more products have come in, and more can going forward also come in. But these products have got different nuances and for different segments. So if, let's say, I am new and I want to buy my first insurance, my recommendation should be your first insurance should be a term insurance, because that's the real insurance benefit that you want to do from a protection angle. The second is when you are comparing yourself to, let's say, invest some money, creation of wealth. Do I have money to do savings? And within savings, then I want to create my portfolio. When I'm trying to create a savings portfolio, I will have a portfolio which talks about short term, long term, how much do I want to play the market risk, how much do I want to put in guaranteed amounts, etc. So that's the portfolio allocation that we want to do, and some allocation of that portfolio should come to insurance, because insurance is the only product which really offers a long term guarantee. Then comes, when you're getting into a phase where your deaccumulation is happening and you want to get into retirement and you need a constant stream of income, is when you look at a constant, let's say, annuity or annuity equivalent products, where you can get an assurance that, post my retirement, this is like a salary which will continue to come into our accounts. So I think these are the three large segments which are covered by insurance. Yes, we have to work a lot more to get the protection gap closed. Touch many more lives. I think we can go a lot deeper into the country And to go deeper into the country, you need to pick up simpler products first, and then you need to pick up, more complex products. You need to simplify some processes. What is helping us really go deeper, and I can, now proudly say that, a very large chunk of our business comes from beyond tier 2 cities, and technology has really helped us reach a lot deeper than what, we would have thought of even 5 years back. So I think that's something which is happening greatly, and we should see the results of all these efforts hopefully soon.
Deepu, if I can come to you and help us in understanding that how the modern insurance companies, especially in India, where risk profiles are very different from the rest of the world, are trying to understand the Indian risks and how the products are innovated, especially related to health and other type of occupations. Help us in understanding that if you have to go deeper into the Indian geographies, because this is a common complaint which we hear from many of your, not your, but the consumers, that insurance companies have us straight jacket format, and that doesn't suit, and that also keeps many of the consumers away from the insurance. So help us in understanding that how you are bridging this knowledge gap.
Good afternoon, everyone. And thank you for asking that question. I think it helps us, demystify, this perception in consumers' minds. So when you talk about, innovating products, there are two things we can do. One is expand the scope of universe of insurance. So for example, when, if you just look at the history of insurance, the biggest form of insurance many years ago, in fact, centuries ago, was marine insurance. Because at that time, the main form of transport was shipping. Once you had the automobile insurance, the biggest form of insurance morphed from marine insurance to motor insurance, because that became the major mode of transportation. And today, given that we are leading increasingly digital lives, right, cyber insurance could be the next frontier. So for example, we launched cyber insurance linked products, some years ago. Similarly, we saw recently, that, for example, you have a lot of double income, no kids couples, but a lot of them have pets. So then we launched, pet insurance, right? There is insurance for spectacles, right? There are insurance for mobile covers. So how do you increase, the coverage of insurance? So that's one way by which you increase penetration, because you expand the scope of insurance. It's like people are using more products, you become more contemporaneous, and you offer insurance there. The other is on the existing products. How do you do it? So for example, let's take during COVID, right? When you had this hybrid model, you're working from home and working from office. You're not using your car every day, right? So why would you want to pay insurance for the full year? So then we launch pay as you go. So depending on how you use your car, you pay the premium. The other is, to the point that we've been hearing through the day, right? Strong India story. You have a lot of Indians today, who aspire to, treatment globally. So for example, we have a health product, right? Where it's global, right? You can get treatment, outside. The other is, today when you look at insurance covers, let's say health insurance, typically you would think of hospitalization. But you also spend money on OPD, right? When you go, right? There are covers for OPD today. So whether it's new products or whether it's enhancing the scope of coverage of existing products, right? And I'm talking about products which are already live. These are not, on the anvil for launch, let's say in coming years. So these are ways by which, we can penetrate further and deeper into the Indian market.
Deepu, if I can stay with you, you have talked about many of the urban phenomena. The common criticism of the agriculture-oriented insurance is that, the structure of this is like what we find in the Western world, where, the land forms are bigger. So most of the insurance company does is that they take the block, the insurance payments and the payouts is dependent on what is happening in the entire block. But India is a mixed agriculture economy. In my neighborhood, somebody would be growing something else. The impact of same hailstorm will be different on the two different crops. But innovation is not there to understand that particular farmer's issue. And that is keeping many of the farmers away from, the insurance. Although the government of India as well as various state government is pushing farmers to have insurance. But year after year, we see that governments have to still shell out more money to compensate many of those things. Do you think that investments are not being made by many of the insurance companies to understand these type of ground problems, or do you think it's still a very small economy, to deal with? What is the view like?
Yeah. No, again, I need to thank you for asking me this question, because every question is an opportunity to, dispel some, misgivings or, wrong perceptions. So firstly, if you look at crop insurance, it's one of the 4 prominent lines of insurance, in India. It's very significant, whether it's motor, health, property, and crop or agricultural insurance. And this is an area where you see everybody participating. You see public-private partnerships. The government participates, and so do, insurers. And there are mandates, right? It's done at a state level, right? And that's how, the whole landscape is structured. And of course, there are variations, right? There are some formulas given by some governments, and it varies from government to government. Now, to your point on innovation, and I think sometime back we read, right, and it was a pleasant surprise to us, that today there are more internet users in rural India as compared to urban India. So we've leveraged that, and you'll be surprised to know that some of our most widely adopted digital innovations, have happened in the space of agriculture insurance. And I'll give you 2 examples. So what happened during COVID, right? I go back to COVID because that was the point of inflection for adoption at scale, right? You had farmers sitting at home, and they didn't have access to any information because there is no organized marketplace. So we launched an app exclusively in Indian languages, because obviously you can't use English in rural India, right? Most apps tend to be in English, exclusively in Indian languages. So using this app, they got notifications. They could get information about the weather, about pricing fluctuations, and a lot of other information, and thereby, they could continue to be in touch with, the world at large. And because of that, they were able to sustain. And if you look today, for example, claim registrations, we've launched voice bots, and we've seen penetration levels close to 100%, because they just have to use the bot in their language and register the claim. So if you look at crop insurance today, whether it's from the government perspective or from the private, point of view, it's one of the most digitally savvy forms of insurance.
Thank you, Deepu. Vineet, of the life insurance point of view, there is a common belief in many of us is that our lifestyles are changing, and I'm sure the medical faculty is already tracking the changes in the health scenario. Do you also track the changes in the lifestyles, people's lifespan, understanding of health, the investments into the health sector? What sort of understanding life insurance companies develop in this?
So there are multiple stages. One is, you could study your own portfolio to figure out how the trends are happening. The other is, there's a lot of interaction which happens with reinsurer who bring in a lot of global data, Indian data, to talk about how they are seeing the trends happening. And then there are obviously, a lot of research and technology which is moving into the entire medtech space, etc. So there are various inputs that, we do get. I think the question is saying that how are these trends moving, and that's what your this thing would be. So I think we have seen over the last, decade or so that it's happening every decade, but I'm saying the life expectancy is going up. And it's going up for 2-3 reasons. One is, because, we're becoming more and more aware. As we become more and more aware, we are able to, and we are getting better access to medical facilities. So both these things combined increases the lifespan, because you are able to go to a medical facility much earlier before let's say the entire issue becomes serious. And you are able to maybe cure it and prevent it, or, have a better lifestyle to sustain it. So that's definitely going up, and it's happening across the world, not just in India. And in India also, we are seeing this shift happening. So, plus, I think what we are also seeing is a lot of use and declaration about preventive and wellness being a theme. Because whenever we do sessions with our customers, whenever we try to, do awareness sessions, etc., there's a lot of involvement and thing about, how do I prevent, how do I stay healthier, how do I, what are the things that I should do every day to keep a lifestyle which is, much more healthy. So those questions are increasing, which means the entire, population, etc., is going more and more health conscious, and that's really helping us.
So what does, this conversation, this impact, I'm sure, would be happening in your boardroom meetings also, that this trend is changing, and many of the companies have already deployed artificial intelligence to map many of these changes. So what sort of changes are there in your boardroom meetings to understand or maybe innovate new tools because, people are adopting new, not only food habits, but also, the way they used to conduct, in a pre-COVID world, their lifestyle. So they want to live healthier. They are moving to different parts of the country. They are traveling lesser, or they're traveling in a very different mode altogether. So what sort of these type of changes impact the conversation in the boardroom?
So from a very life insurance perspective, because it's a very long-term business, you have to do 2-3 stages, for your business. One is clearly how do you really classify and assess the risk when the policy is being written, which means what is the health status of the person who wants to buy a policy and how does that look today. I think that has moved significantly with technology, because you were able to do an assessment which was earlier purely physical medical driven. Now a lot of video based assessment happens, a lot of at home tests can happen. You really hardly need to go to the clinic for a test now for an insurance, so a lot of this is video based or at home, or with one single sample you are able to do multiple things, etc. So it's become much easier for you to cross that entire medical piece and assess the risk. And this risk assessment is maybe better than what we were doing earlier, because now a lot more data is also available in terms of assessing it. Second is, once you assess the risk, are you, then encouraging the customers to maintain a better lifestyle, and over a period of time, how this trend will grow. So I think these are the things which will, over a period of time, have small things like, how much am I traveling, how much am I doing this, can impact, but the smaller, few years of your life is not something that, we would really want to focus on. That might be more of a health insurance
Deepu, if I can
challenge.
take this conversation to you, in the health side, especially in the Ayushman Bharat segment, government is talking about, clubbing the data, which the, my health data with the insurance companies. Do you think this will also impact the premiums as well as the understanding of many of the insurance companies about the health of the consumers and their innovations? What is your view on this?
Yeah. See, there are two dimensions there, and I'm glad you raised this question. One thing we need to understand is that insurance is a push product. Like you said, people don't wake up in the morning thinking, I'm going to have a bad day, right? So, and you need insurance for a rainy day. So it is basically sold through conversations. And I'm touching upon this because you spoke about the government, right? Now, the biggest form of distributors can be governments. Today, you see a lot of governments are offering universal health coverage. And this election season, you see a lot of manifestos today where they promise, health insurance coverage. So that clearly shows that when the government gets into the act, adoption happens at scale. So that is the first dimension when you spoke about, governments getting in. Now, the second is when it comes to data, right, and the impact. One, of course, is privacy. We need to keep, privacy in mind because health data is extremely sensitive. So even as you enroll, I think from a consumer side as well, there is wariness. And similarly, when you get adoption at scale, you need to ensure that you have the right guardrails because it's easy to get excited, but how do you ensure that you get the maximum out of it while maintaining privacy? That is the second dimension. The third thing is, of course, as you start to metricize your health much more, and to the point that even Vineet made, that when you shift from curing to prevention, definitely it's going to, impact, consumers, as well as their lifestyles. Because what we are also seeing increasingly is the demand is shifting from curative to preventive. And that is precisely, where metrics come in. So whether it is usage of variables, how can we, for example, get data from that and then, factor in those parameters into our policies. I'll just give you one example and close this point. In the US, there's a platform. So what they do, because they take data, when customers use variables, they take data and they coalesce that data and share it in an aggregated manner with insurance companies. And then they, using this data, come out with products. So these products are real time. And without this aggregator, this shift cannot happen. So we see the same thing, likely to happen in the Indian context.
And now, I want to prick your minds on LIC. The largest player in the market went public. So what does this mean for the industry? Now we know this company a little bit better than what we used to. Does it make any difference to the lives of the competitors? How do you see, the LIC's disinvestment?
I think that's more of Vineet Street because he's in that industry.
So I think any kind of listing and any kind of disinvestment at a philosophy level creates more transparency. And more transparency is good for the company, is good for overall the economy, especially when it's a large institution like that, which is going through, listing and has become more transparent. So I see it as a big positive for the industry. I don't see it as anything else, because as more and more large players, in fact, as we should become larger, and because insurance companies are holding public money, I think more transparency is helpful for the industry, and it will help, make the industry stronger.
So now we are almost into a year. You can tell us that what sort of benefits it has given, no? So you can list 1, 2, 3, 4. That
So
these
I
are the
think-
knowledge which you have gained.
No, so I think I will not really comment on LIC in particular, but at an industry level, I think because you're asking questions about LIC, a lot of analysts cover that as a stock as well. There is an element that brings a lot of discipline internally, and the organizations also then understand that there are some focus areas which are brought in. So overall, I think any kind of transparency, people knowing more about what is happening inside an organization is always helpful. And when it happens with a large player, it's always good for the industry. So there is no way that this will not be a good move for the industry. I think it's a great move, and it will help increase penetration. It will help take us to the next level in insurance.
Deepu, you want to make some comments?
I'll just take a slightly broader angle there. I think the whole idea of insurance industry is it's a huge provider of funds to various entities in the financial ecosystem. And the other is insurance is a huge generator of employment. Apart from the workforce in the industry, there's a huge distribution network. So from that perspective, as a huge provider of employment and as a huge source of funds, insurance plays a significant role. And the other is, just going a little beyond, insurance itself, right? So for example, we have bank guarantees, right? Similarly, you have insurance, right? We came out with surety bonds some time back. So I think if you add all of this, I think the role of insurance on the financial ecosystem is huge, and it's only set to rise.
Thank you. Thank you. May we open the floor for some of the questions? We only have 2 to 3 minutes. So, gentlemen at the end, please introduce yourself and ask questions.
Hi, my name is Kapil. I'm working with Axis Bank, primarily looking for the credit protections against the loan which we offer to the customers. So my
Keep mic closer to your mouth. Speak louder and bit.
Is it okay now?
Yeah, very much.
Better.
So just an insurance boost, you can say. So my question is to Vinit sir. When we know that insurance penetration is quite low in our country compared to other foreign countries, why don't the government take a step and say that whenever you go for a loan, you must have insurance as an attachment? This gives a kind of risk mitigate to the banks to maintain the delinquency in the uncertainties, and at the same time our penetration as well as the security from customer point of view get increased.
You want to?
Yeah. So I think
why I'm asking this because whenever we see that we are selling a loan, we see that insurance has not been taken in a positive way. You are pushing this product unnecessary and increasing a burden on the cost of a loan to the customers.
And when you talk about loan, that is personal loan, right?
No, not personal loan, mortgage loan.
Okay.
It's a consumer's loan, basically,
Consumer loan.
auto loan, everything.
See, as a sane financial planning, if one has a loan or a liability which is dependent on that individual, one must take an insurance. I think from a simple logic of financial planning, one must take an insurance. Now, whether that needs to be pushed, made mandatory, whether that needs to be encouraged, I think those are the various, points where somebody needs to really draw the line on how it needs to happen. I think a push always creates some kind of negative references. So it's always better that people understand what they're buying, why they are buying, and what is the benefit that they're going to get. I think that's important that they need to understand. And that's the process of interaction when, let's say, your team members or anybody is talking to the customer while the loan is being sold to the customer or he's buying the loan, that, why is it important for him to cover that loan? And how does it impact his family if, something was to go wrong? And the amount of the insurance cover on top of that loan is very, very small. So I think some of those aspects are things that need to be really explained to the customer well. And then I think, attachment of your loan on this thing will help the bank as well as help the customer as well.
So my ask is that
one question, one person, one question, because there is another, we are running out of time. Sir, please. Later on, please. At lunch, you can ask. So please introduce yourself and then ask.
So my name is Deepak Khemani and I'm a practicing insurance advisor for the last 40 years. My question to Deepu is this. When will cashless become seamless and will health insurance premiums for senior citizens ever come down?
So to the first point on cashless, there has been a huge move by the General Insurance Council of India to, basically increase, the cashless, percentage. And we are seeing it rising now because of the, concerted effort, by the industry. But the industry wants it to be cashless, so they're working with all the insurance companies have come together and they're working with hospitals, to make it seamless. Secondly, coming to pricing for senior citizens, insurance is basically a risk-reward equation, right? Well, from a consumer's perspective, consumers would, obviously want a premium as low as possible. Insurance companies also need to, factor in risks because it is a crowdsourcing business, right? You take premium from many and you pay claims to a few. So that is where, the whole equation lies. And the other thing which we may need to keep in mind is, we've done some studies, right? Insurance premiums in India, are amongst, the lowest globally. I'll give you an example from a different industry. Take the cost of a Mercedes-Benz. It doesn't vary much between Germany and India because of taxes. But you look at the cost of insurance in Germany, significant multiple over India.
So I think when we become a first world country,
Sir,
that logic
one
would be
person, one
I'm
question.
not asking a question.
No, but at lunch we can. Any other question? Last question before we wind up, please, sir.
He raises
Yeah, please.
So both of you explained the products and the planning very well. I wish I had the relationship managers like you. So
He'll be very
question-
expensive, huh?
Yeah. So that's what I'm making inexpensive. So the same thing can go to AI and all your 10,000, 20,000 people can start speaking the same language, what you are speaking. So my question is, how do you see the AI to augment this kind of relationship managers? I'll see all your staff speaking the same language as you're speaking with AI.
I think this is AI, especially as Gen AI is evolving now, is going to really help us augment a lot of interactions with the customer. Whether it's on the servicing side, whether it's on the sales side, whether it's on the nudging side, it's going to help us augment a lot of that. And I don't really have any doubts that 5 years from now, you will have assistants available to pitch the right product, which is more suitable for the customer, and explain also why it is more suitable. Like for all these examples, why does the customer need to buy? And those prompts might be driven by a lot of data analytics and a lot of data work which is happening at the back end. So I have no doubts about it. I think if your question is, do you see Gen AI solving some of these problems? I definitely see Gen AI solving a lot of these problems.
So I know, a lot of you have questions in mind, but problem is that we are sitting between knowledge and food. So lunch is served outside. So I really want to thank these two gentlemen for the insights you have given. Thank you very much.
Thank you, panelists. I would now like to request India Today's managing editor, MG Arun, to come on stage and hand over token of appreciation to our speakers. Ladies and gentlemen, now this brings us to the end of a very insightful event. I learned a lot and I hope you did too. I would like to express my thanks to all of you for spending the day with us here. And a special thank you to our panelists for sharing their perspectives and our moderators for facilitating the conversations. And now please join us for lunch. It is being served outside the hall. And do mark your calendars because we look forward to welcoming you next year as well. Goodbye.